Oh, yeah, baby. I can see some of you out there. Let's see what we're doing here. Sort by newest. Save. Subscribers. Any duration. Good morning. How y'all doing out there? How y'all doing out there this morning? How do you like the new rig over here? Give me a quick second here. All right, give me just quick second here. Oh boy. Link copied to. Y'all doing well out there? Let's go right to the main stream real quick. Now, there's probably going to be some wonkiness going on this morning. I tried to set everything up in the middle of the night last night, and as a matter of fact, none of these numbers here are right. So, bear with me at this point. And we'll work right on it. We'll work on it here with you in just a moment. So, give me just a second here. I'm gonna try to pop up on FinTwit and post the stream. They're like, oh man, oh yeah, Poo Poo, what's up, brother or sister, whoever? Spy, Tesla, SPX, ESF. What else we got in there? How are y'all doing? I had to break down in the middle of the night last night. And I'm like, I can't go not streaming right now. I'm like, I need a backup system anyways, I guess. But I am, my soul is slightly crushed at this point. So let's start, before we get too far into it, look at how small my camera looks over here. You guys can't see me up there, can you? Oh, let's see if we can make it a little bit bigger. And we'll try to come in and say hello. Let's see if I can bring that up there, and oh, you guys can at least see me. Okay, so just for the moment at least, right? I'll make this smaller here in just a minute, but I don't want to fuck around with it too much. All right, this is good enough for now. Okay, so, but we have some stuff to talk about this morning. So let me go through some stuff with you, okay? Forget about all this right here. We're just going to take a quick look right here. Now, just as we're getting started here, so I want you to see here, okay? I'm going to show you something here. We just came up. I don't know if I don't have my my tool here. So you're just going to, I'm going to put a tool up here in just a moment. But until I do, let me see if I can. In the background, I'll bring a tool up here in just a moment. But just follow my cursor, as the goat would say. So we did sell down. This is a almost like a 3 trigger combination here. Same thing right here. Okay. So we traded below our 1 minute and our 5 minute. We traded below this green line right here, and this is your. I believe this is your daily. Trigger. This is your hourly. Teed right off on it again. Came up for a retest once again. You can see this concentration of these 3 triggers. Give me 1 second here. What I'm gonna do is go back to the main live stream. I'm gonna grab a tool here so I can draw this out for you. I'll give you just 1 second here. Web paint tool. I'm going to add this to Chrome, add it to Chrome, add the extension. Web pages add to Chrome, turn on sync. Okay, yeah, man, I'm in for the sync. Let's sync it up, baby. Pin that bad boy there, close that up. Let's see if we get, oh, come on, dude, do the web paint tool. Extensions. I don't know what's going on here. I might have the wrong web paint tool. Reload that bad boy up. I don't know what's going on here. Why the web paint tool is not working. Might have the wrong web paint tool here. Just a second here. Let's try this one. See if this one works. Pin it to the taskbar. I don't know what is going on with this. I've got this new on. Okay, hold on there. But it's not doing what I want it to do here. Dude, what in the fuck is going on here? This new Windows 11 shit is kind of like not doing it for me. It's not working in Windows 11. Good morning. How's everybody doing here? Good to see you, Winky. Give me just a second here. All right, let's see. Remove from Chrome, remove. Okay, add Chrome, add the extension. Done. And pin it. Please try another page. Okay. It's really weird. It's not wanting me to. It's not wanting me to. You gotta be. You gotta be kidding me here. Have to be. Have to be kidding me here. Just a second here. All right, boom, we're good. Rock and roll, baby. That didn't take as long as I expected it to. All right, so we're going to switch back over for you real quick here. And I apologize for the way everything looks here. See if that does a better job here. So what we're going to be looking at here is right there. Okay. Get out my taskbar above. Okay, so I want you guys to take a real quick peek at this. Okay, this is the SPY right now. Okay, and I want to show you what you oftentimes cannot see in the background when you're trading. Okay, when you're like, hey, I want to buy a dip, something like that. I want to show you what's actually going on in the background. So if you look here, you can see that. I mean, this is kind of wonky, man. What is going on? Please give me a. It's so bizarre. Windows 11's like, I'm not having anything to do with this. I can get a good color here for you. Perfect. Horrible, horrible. Size, baby. Size. We need size here. We need some size. Yeah, that's not bad. Okay. So what we're gonna do is what I want to show you is this: is that right in here, you can see velocity is coming down in the market. Right, momentum is coming down in the market here. We can't really see this in price right now, but I do want to show you that you see we're supported here on this hourly trigger here, and we lost the 1 minute and the 5 minute here, this red line, and traded underneath. Okay, and so what bears are trying to do right now is they're trying to sell this market underneath your hourly, your 1 and your 5 minute, and they've got this huge cluster here, which is very bearish. Okay, and if they can maintain staying underneath the 1 and 5 minute, if they can maintain this here, right, it's kind of a place where you want to be actually taking a put here, right here, and looking for lower lows. And you might say to yourself, why would you do that here, Cap? One is because we've lost the 1 and 5 minute, right? We're underneath the hourly. And the key point here is we've lost momentum. So where this might seem like this is a buy the dip kind of a situation, right where we are right now, in reality, you're looking for a put to be selling above right here. And this is, let's take a look at what price this is right here. It's right at 412.26, right? Bears are going to try to defend this right now. So what we're gonna watch for, and the other thing too is when we're right here, when you're seeing this velocity come down, this velocity doesn't start building itself back up here. If it starts to actually go like this, you can actually front run puts in the market if you continue to see velocity break down on the hourly, even if price isn't showing, even if price is coming up currently. If you see velocity coming down, you'll see price follow after. So we'll pay attention to this as time goes on here. And what we're gonna do is we're gonna look at this it's the 412.09. So we're gonna roll right back over to the mainstream, and I'm gonna draw in some boxes for you here. And I want you to see that there are bears right here. They're gonna want to defend this. And as long as they defend this right now, we'll pop in some EMAs here for you, so you can follow along. Let's see what an EMA here. And, oh, yeah, we got all the funky EMAs going on. Style. We'll do a 27 EMA. We'll get rid of this one right over here. We'll make this one, what do we like, green or yellow? You guys like money green? We'll make that money green. We'll make this kind of a little bit thicker. 7. We'll do this color here. It's yellow. Good. And so we've got this yellow. We want to always be above this yellow color here. And then we'll do this 120. And probably make this like I think we'll make this 113 or something like that. Make this one red. And size, we'll make this one kind of fat right here. Looks kind of cool. Done. Yeah, I don't like that color. I think that color is gross. Get rid of that one right there. We don't need that one. Change this color to right there. Perfect. Christmas colors. Bears want to be selling this whole area right here. They need to defend this right here, right? We need to have price come above to even confirm. Just to confirm, right? We need price to come above this, and we're also going to need to see your EMAs right here come underneath, okay? And it's gonna be kind of wonky. Coming up just like this, okay? So this is price right here in the green. Until you get this confirmation above, like you can't even take a trade right now as a bull or call this a bottom here until we actually defend this zone above. It's roughly 412, 15 or something like that. So my point two would be that you would take a put here and defend this position with a stop above here. I know that sounds crazy, but until we see an hourly ramp here and some kind of a proof, you're not going to see us begin to regain a trip higher here. So we'll watch this bottom currently, and we'll see if we can trade above. And in the background, I got some stuff to do. Yeah, there's no risk. Yeah, so if you're to buy this bottom right now, this is a very highly risky trade. Right now, the bears are sitting here, teeing off, selling. You could technically, if you wanted to do some scalping, you could have bought this low down here and traded this up. But this is a classic bear setup, right? Sell it down, come right back up for the first rejection, and they're going to be looking for it right here to tee back off to go lower. So bears are in control right now. Bears got this. They sold it right here. They sold it above over there, and they're just waiting right here for you to sell it right back down. Now, if you're bullish here and you're like, oh, Cap, you're wrong. We're buying the dip. I agree with that. We're buying the dip. But if you wanted to take a trade that's guaranteed, you need to wait for price to come above here and recheck itself and then trade higher to take
Just
this.
keep in mind again, Neil Kashkari
take this long trade in the market.
A Boston Q&A. So we got the video on the feed there. Feds Collins currently at the stand, wasn't scheduled to be speaking at this event. Feds Kashkari are yet to come to the stand to ask questions though. So again, just some activity on the video. It is up on the feed.
And this is actually a really good setup for you if you're a dip buyer to be looking for. Like you're looking for a dip to buy. You are looking for that sell, that retest here, right? It was rejected, and then you want to see the break above price. You want to see the moving averages come up with you, the retest, and then you're off. Okay, this is where you'd buy the dip right here. BTD.
$35 billion in 10-year notes. So we saw a prior bid to cover of 2 to
right here is where you buy the dip.
Prior high yield of 3.575%. Just taking a look at some notes ahead of this auction here, as JP Morgan strategists see the auction needing additional outright concession versus Tuesday's closing level, given valuations remaining relatively rich. So looking to the latest CFTC
this is exactly where they are right
data, it shows that speculators were net short 542,000 10-year note contracts and net short 126,000 ultra 10-year contracts, which is a possible source of covering demand. So looking to primary dealers' positions in the 7 to 11-year sector, they were net long $2.9 billion in the week ended January 25th versus the $2.7 billion average net short over the past year. So a slight increase on net shorts compared to the average there from primary dealers.
Give me just a second here. I'll set up your levels for you today. 413.08. Here's your pivot point. This is your negative daily gamma underneath this pivot point. S1 for you is 409.68. Sorry about it doing some of the stuff on the fly. I've been up all night. I lost, not lost yet. I've got someone working on a computer for me. And it's now going to turn into a backup. 404. Yeah, way, way, way down here. Here's your S2 down below. Make this all come up for you so you don't get lost here. Then S3 is 400, way down here, right? S3 is way, 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 way down here. 476. So where the Bears want to go, baby. Bears want to come down. You guys see what's sitting behind me? You guys see that back there? So here's your pivot point right here for your R1, R2, R3. You're going to be looking for 418.60. Woo! There's your R1. 422, baby. Look at how high this is. 422. Flat. Bulls are like, man, I want to go higher so bad. This is R2 right here. And then you guys want to see the Valhalla moment, right? The failure to make a new high. Huge range expansion, right? 427.50. I bet you the Bears are out there just drooling right now to start selling this stuff down. Okay. See if we can get that all spun up for you. Oh, yeah. Get that nice little gap above here. Let me know in the comments if you think we break above here. Because the momentum is turning up a little bit. We'll see.
So the live video for this is on the feed. So again, Feds Kashkari speaking at the Boston Economic Club now.
Right there. Yeah, there's no. So if you're a trade, just want you to know out there, if you're a bull, right? If you're to trade this setup 10 times, you'd probably lose. You'd probably lose this 4 to 6 times. Well, you could trade it to this red bar right here, but if you were like, I'm full port and calls right here, the place the full bore calls here is above this red bar. All right, now let's see what you guys are talking about. My whole setup is like everything in this setup is brand new, and then I had artifacts from previous images and stuff, like stuff for the production side of stuff was all wonky. And then when I turned the machine off, and then this morning I turned the machine back on, and it was none of it stuck. So let me know if you're bullish here or not. I'm interested to find out if you think this is the dip to buy. Let's take a look at I'm going to take a look at the market breadth indicator real quick in the background, and I want to see if we burned off. We're rotating right now.
5 minutes time to the top of the hour now. Again, the US is selling $35 billion in 10-year notes.
Yeah, we're getting a little bit of roll in the market right now, not so much.
Was 2 to 53 with a prior high yield of 3.575%.
We're definitely getting some selling right now.
Is currently speaking at the Boston Club. So we have got the video for this on the feed for those interested.
And I'll show you. I'm going to come back. You guys want to watch this breakthrough? Do you guys want me to show you the velocity on different time frames? Yeah, I'll give you some downside targets right now. That's a good question. Downside targets? First one's right there. Right there. 402.40. Maybe just let's do 403 flat. How about there? Right about there. Is every $1 in Tesla a price target? Let me look on the 1 hour, 1 minute. 1 minute's good, doing quite well here. 5 minutes doing well here. 15 minutes doing well. 1 hour is trying to recover right now. And this is what I'm going to show you here. This is what I want to show you. Let me go through this with you real quick. Daily, 1 hour. 15-minute. One minute right there. So we'll scroll back over so you guys can see this. Yeah, let me bring up my, I have to actually bring up my.
As Kashkari says, the services side of the economy is still hot. Says
Do
on
you see that
inflation,
weird,
there's
like,
not much
subscription
evidence
thing
that
that's
rate
up
hikes
there?
so far have had much effect on the labor market.
A second here.
And Kashkari adds that we will need to do more, but how much is not clear.
Yeah, I'm looking for some 4010Ps. I'm going to try to jump in up here and try to buy some puts. Try to
And we are
grab
shortly
some right in
expecting the
here.
results of the US 10-year note auction here. The Treasury, when issued, is due at the top of the hour. Treasury, when issued, 10-year yield at 3.643% ahead of this auction. So again, that's the 10-year Treasury, when issued yield, 3.643% ahead of this $35 billion auction.
So I've got set up in the background. I've got 410Ps, and I've also got set up 413Cs. On here. No. Getting wonky back here. I'm watching both of these trades, 410P and 413C. If we start to roll over here, we're getting kind of roll over in here, and we start to trade below this 1 minute.
Fed's Kashkari says wage growth is too hot now to support
I'm going
2%
to grab
inflation.
some puts over here. If we begin to trade above price, if the 1 minute crosses higher, I'll buy the calls right here, and I'll buy some puts right here, depending upon which way we go.
Kashkari adding that we need to get wages to around 3% in terms of growth.
No, Bookmap's not frozen. Hold on a second.
So the 10-year notes a bid to cover ratio coming in now at 2 to 66, 2 to 66, with the high rate at 3.613%, 3.613%. The US sells $35 billion in 10-year notes there,
You guys
awarding
just want to see.
88.24% of bids at high. We're seeing primary dealers taking 5.36% of US 10-year note sales, directs at 15.19%, indirects at 79.45%. So US 10-year notes drawing there at 3.613%. That is against the 3.643% pre-sale when issued yield.
Getting some wonkiness with this. This book map's not wanting to do it, is it? I'm getting some issues with my new rig here. It's not doing it. I can tell you 1 second here.
Betty Kashkari says we don't want to cause a recession, but we know we have a job to do on inflation. Betty Kashkari says financial markets have more confidence than we have that inflation will fall quickly.
I guess that'll have to work for right now.
Noting treasuries extending their gains after a strong demand in the 10-year note auction.
Just gonna watch this price come higher, a retest of this price, and then you'll see a rocket ship higher. Is that working for the moment, I guess? I think that's working. That'll do it for now, right? If you're a bull, you want to see, like we said before, this white line come above. You want to see price follow and retest. That's where the long is right there. One minute is strong right here.
Best Kashkari says most of my colleagues expect rates to go above 5%. This is certainly possible that it will go higher, though. So that's Kashkari saying most
Bullish.
of my colleagues expect rates to go above 5%, but it is certainly possible that it will go higher.
That is bullish. I'm in 414 C's.
Best Kashkari adds we will then hold rates for a long time and then decide if rates will go higher or down.
Want to wait for the white line to come back up. You should get another retest down below at some point. I'm going to retest of the 1 minute right now. I don't know what you guys can see on the screen right now. You guys can see bookmap better. You want to see the white line hold. If the white line does not hold, it'll be a rejection. Adding to my position. I'm in for like 36, 37 cents. Now trading 41 cents. Trading 42 cents. I wanted to add some more just then and I didn't. Nope, no, we're not doing that. Trying to grab anything at like in the mid 30s. I almost hit the buy button on 40 cents. Still trading 40 cents, 41 cents, 40 cents, bouncing around. If I can pick anything up at like 30, 35 cents to add, now we're down to 39 cents. If I can grab like 35 cents, 32 cents, if we get a liquidation break here for a minute or not, I'll see if we can grab some more here. These bears want to sell this down so bad. One minute's getting a little bit weaker. The daily looks like shit. 15-minute looks good. Harley's trying to make a run back up here. Added some more. Put some more calls on right here.
Surely expecting
Make
results
sure you
from the
have
Fed reverse repo
stops
facility.
below. If we do reject and trade lower, you want, if it starts to blast down, look for a place to get out in here at some point. Right there. So if there is any kind of liquidation break, if we ever trade down below here, if you can, wait until here to get out of your trade. Two targets above. We've got this previous high on the day here. I don't know if you can see it. You can see where they're selling over here, and you can see where these gaps are down below. I tried to sell this. Probably bring this down a little bit more, like right there. Just waiting on the 1 minute to catch up, see if it rejects or gets carried forward.
103 counterparties take $2.06 trillion at the Fed reverse repo operation.
The daily looks like, the only thing that looks like shit is the daily. The daily looks bad. I'm going to retest the 1 minute right here. Try to send it lower. $411.75. They're gonna try to break through these stops right here. Hold on here. Give me a second. Give me a second here. I got something going on. Sons of Liberty. I don't know what that's about. Probably something horrible. These Bears, man, they're trying to get right underneath here. They're trying to stay underneath this red bar right here. They want to start reversing this. They're like, Bears like, we're going down here, and then we're going down there. And I'm like, I don't know, baby. 15-minute hourly's good. Daily candle though, man. Whew. This looks like sell the rip even if we go higher here. At least on a daily basis. Market breadth indicators rolling over slightly. I haven't looked at any of the subsectors yet to see if there's any rotation. So we'll pay attention to that as the day moves on. We'll take a walk around the market and take a look. Now watch for a liquidation break here. We'll take a look at UNG if you want, Chase. The moment I get out of this trade, so if we start trading higher here, the moment I'm done with this trade, we'll take a look at UNG. And if we can get up here at least, maybe I'll get out of the trade, and then we can at least take that part of the trade. Or if we blast below, if I get stopped out here or anything like that, I'll close out the trade and show you UNG. Now trading 39 cents. I've been bouncing around here. I'm in like total for, I don't know what I'm in for right now total, but I know it's low. It's like, I was buying at like 32 cents, 35 cents, stuff like that.
It's been 10 minutes time at the bottom of the hour. Do you get the Bank of Canada releasing their summary of deliberations? So this is essentially the Bank of Canada meeting minutes. So this is a new release. Bank of Canada have not done this before. However, under IMF recommendation, they are now doing this.
We'll take a look at God damn. We'll take a look at where you cut your losses on, let's say, UNG. Or you take your profit, stuff like that on UNG. Like, why is UNG not? I didn't know UNG wasn't going up at this point, but we'll take a look at where you could take profit and knowingly take profit. Losing some call premium right now. Just grinding down call premium. Bears know they don't want to give this up. They know if they give this up, we're off and running too. The moment they give this up here, we're back in buy mode above. So they're going to do their best to try to sell this down. It's kind of a crucial place for bears to stay in control. The moment they give this up, this isn't quite bear capitulation, but it's pretty close. Now back up trading 37 cents, 38 cents. Another note here would be that puts are being ground down in this process. There's a bunch of, there's 289,000 410Ps. They're only worth 25 cents right now. But I'm going to assume at some point when they're cheap enough, we'll roll back over and try to print those. That's 410C. So maybe we only get to 413.08. Now trading 39 cents, 40 cents. If I can get up to like 45, I'd be happy. I'd take even 60. If we took 60 or 50, anything in there, 45, 48, something like that, I'd be happy. Bulls starting to win this fight right now. Trying to win this fight right now, I should say, not starting to. Attempting to. Should get a nice fat squeeze coming up here in just a few moments. Now trading 40 cents, 41 cents. Come on, Bulls. Bulls buying right now. They're doing a good job. More buyers than sellers on the 1 minute. Five minutes starting to ramp in the background. 15 minutes not doing too shabby here. Hourly, man, is sucking again. I just took off half my position at 41. At 41 cents. I'm looking at the hourly here. It's not doing so hot. We're coming into the half hour right now, 124. We got 6 more minutes left for Bulls. I've still got half my position on. I'm looking for at least 413.08. And then a price target above at 414.50-ish or so. But I don't like us coming into this hourly. We're losing some steam here in the hourly.
So again, this is the first time the Bank of Canada is releasing this. Is essentially Bank of Canada's meeting minutes being released upon IMF recommendation.
Not a bad trade though, believe it or not. It was almost almost 10-cent trade. That was a 25% win. Stop still below, down below. We need to get a new high right here. I don't like not getting a new high. You can see traded higher. Came up, got a new high, right, on this trade at least. And we didn't get a high here. We have to get the high by 130. It's kind of crucial here. It's 125 in the afternoon. We got like 5 more minutes left. We got to catch a new high. And we're getting another kind of a retest on the 1 minute. You can see the first one right here. This is a high. This one right here is taking a little bit longer. So probably hold this trade once here. I've got 10 more contracts on right now. If we can't get a new high here in the next few, like 5 minutes or so and grab this, we start rolling it down and over like this, I'm going to pull it all off. Trading 40 cents. Give me like 48 cents, man. 50 cents, 60 cents. I'll take any of that shit. I'll take whatever you can give me. Hey, Tony, how you doing? No, thanks, man. Yeah, you're looking for... It's the hourly that we're really watching here. The Bulls are not putting it together here, so... This is kind of like the bear... Yeah, nice little liquidity break down below. If you're upside down in calls right now, you're just going to wait for one more green bar up, and you'll try to grab your stops. $127 in the afternoon. The daily is looking brutal right now too. The daily is like wherever we go here, even if we go up, let's say we go up here and we trade up here at a daily basis at least, they're just teeing off above here in the daily candles. So still looks like rotation. Doesn't look like distribution at this point. You can see the bulls are getting weak here. Oh, little sneaky fucks trying to come down here and try to trigger stops. You see that? Just trying, just begging to trigger stops. Now, if we get a rejection off this white line right here, if we get the rejection here, you probably want to pull yourself out before we start bloodbathing it down. So you want to be able to regain this white line right here that's in front of us. If we don't, we're going to start ripping lower. Make sure you have stops in place. Make sure you have some puts in place.
So 1 minute remaining now for the Bank of Canada's release of the summary of deliberations. So again, this is the meeting minutes from the Bank of Canada's last policy meeting a couple of weeks ago.
Bulls not able to get it done on the hourly. Now 129. Beartown, baby. Oh, I got some Beartown stuff. You guys want to see the Beartown stuff? Hold on, because we're gonna go to Beartown here in just a second. Oh yeah, Beartown, baby. You guys ready for some Beartown? Oh yeah, we're gonna do some bear stuff
from
here.
The Bank of Canada here. So it does say that the council felt that the U.S. debt ceiling negotiations
Beartown, baby. Make sure you get stops. They're going to get triggered right now.
If an agreement were elusive, expressed concerns that tighter monetary policy could have a greater than expected effect on the housing market. Felt it was important to be clear about the conditionality of any pause, given inflation.
Here comes the bears. Make sure you get out of your lungs
here.
Debated
whether to maintain forward-looking language from the previous statement or to signal a pause. Also debated whether to leave the policy rate unchanged on the grounds that it was starting to work and just needed more time. So the council wanted to convey that the bar for additional rate increases was now high, and the council felt more tightening now could help ensure against.
Let's turn some music on. Let's see. I gotta redo all my music too. Oh yeah, baby. What are we doing? What's going on, bulls? What is going on, bulls? Oh, what's happening out there? Oh, oh yeah. Daily Trigger's telling you no. We gotta switch the colors up here. Oh, what's going on? Bears like, you ain't getting shit. Bears like, this is ours. See if this is working. Oh yeah, baby. Oh, oh, what's going on over here? Oh yeah. Oh yeah. Whoa, we know what that means, right? Oh, oh baby. We want some blood. We want bright, bright red blood, baby. A pool of it. That's what we want. Oh, oh. here. Oh, wait a minute. What's going on with these bears? What are they doing? What are these bears doing? We gotta pause this. We can't have the... Bears, you gotta hold on, bros. I gotta turn the music off, man, until you get back at it. You gotta reject, bros. All right, hold on. We'll turn off the bear music for the moment here. We'll turn the bear music maybe back on if the bears can keep it up here. I'll tell you what, though. I'll tell you what, bears. You almost had me there for a second. You gotta defend this above here. You gotta defend this above. You get what I'm saying? You want to be defending this right here and start bloodbathing it down. If we can do that, I'll turn the music back on for you. I'll tell you what, though. I'm totally feeling it. Are bears feeling it today? If you're a bear, right? Tell me if you're feeling bearish here today or not. Let me know. You guys feeling bearish today? Let me know. If you're a bear out there, let me know. You feel what's over my shoulder over there? What's behind me on this side over here? Do you guys see that over there? You guys see what's over there? What's back there? Over that way right there. What's behind me? Oh yeah. What is that right there? What's behind me? Oh man. Oh. Oh yeah. What's going on? I'm getting itchy. I'm getting super itchy. Getting super itchy over here. Hold on a second here. Gotta get the lights back on. We're almost there again. I only got one bear paw on so far. My other hand is still human here. Man, bear, pig. Man, bear, pig. Oh, hold on a second here. I gotta mess with this RF signal bullshit in the background. Man, bear, pig. I'll cue up the music again. I'll swear I'll do it. I'll cue up that music one more time. Bear's got to put it on though. Yeah, I don't really. So I'm on another screener in the background. I'm looking at the daily chart. I look at so you guys can't see this right now, but in the background I'm on another screener, and I'm looking at the 1 minute chart, the 5 minute chart, the 15-minute chart, the hourly chart, and the 1 day chart. So your daily looks horrible. Your daily trend is down. I think Omar is saying that. That is absolutely true. The daily trend is down right now. Omar is correct saying that. Classy Dan, baby. I got you, brother. Don't worry, I got the Bears have been getting shit on since was it October? So I got a whole thing set up for the Bears when we start bleeding out and selling. I got a whole thing. I'm gonna give some love to the Bears out there. I've been ramping on the Bears I've been smashing on the Bears for like 2 months, 3 months, right? So I'm like, fuck that. I'm gonna give some bear love. lose half my followers. If any bears will be left by. Yeah, I know. I saw some guys on. Let me make sure I got. So I saw some guy. Like I've seen some guy. No offense to anybody out there either, but I saw some guys on FinTwit. I mean, these guys have been in puts since like 345 or something. I don't know how you do that. I don't know how you buy puts at 345 or 345, and you're like, I'm still holding them. They're gonna print eventually. I'm like, okay, all right, cool, whatever. I guess you are. I don't know if I believe him, but it looks like it's like no short left behind. It looks like overall on the chart, it looks like no short left behind. I mean, even if we're down, right? If we're down for the next, the price isn't following. I'll show you guys some stuff. So like these down days, price isn't really following the breadth. And so even though we're bearish right now, you're not seeing price follow breadth going down. Oh yeah, teeing right off in the 1 and 5. So price is not being reflected in any kind of selling that we have in the underlying. You really want to see that selling, and we're not seeing it. So pullbacks are good, right? If you're a bull, you don't want to be. There's a few things I got to go over that I haven't gone over. First of all, if you're a bull, there are and should be pullbacks for more buyers to step in to send you up higher. And due to that, right, you do want to buy the dip kind of an opportunity, right? You want to be able to buy the dip. You want to see the momentum slow on the bears, so you can buy a dip in safety. But the other key part here is normally, if you guys think about this as whether you're a bear or bull, it doesn't matter. I want you to just deep thoughts with Captain Jim for 5 seconds. When we would roll the market over in 2022, price had massive velocity down. You would see 1, 2, 3 days, boom, we're down like 1, 2, 300 points. It was nasty, right? And you're just not seeing that over time right now, right? You'll see a couple down, 2, 3 down days, and price doesn't follow. As a matter of fact, we saw that in December. December was the key. Was the confirmation. October was a nice fat bottom, but you really saw it in December when we traded sideways. The market breadth had plummeted, and price hadn't followed, and that was the key point. Knowing that we were going up at that time, and I'll show you this. Let's see if I can bring this up and show you guys what I'm talking about here. Let me see if I can bring this up in the background real quick. Give me just a second here. It's kind of a neat thing to be looking at. Give me a second here. Where is... Man, I got some wonky shit going on here. Just let me show you guys something real quick, okay? So I got all kinds of nonsense going on. So I want you to see something here. Now, you can't see it on this, for whatever reason, you can't see that breadth had taken a nosedive here, but what I want you to see is a better way to look at it. So when you see breadth decline right here, you can see that price the price decline was insane. This is an insane move right here, right? So price was proceeding, right, or faster than breadth, right? Price declined faster than breadth declined here, right? You kind of saw the same move down here, right? But we got a nice fat low down here, right? Great volume down below. And then this is the next area I want you to look at, though, right here. And we had this decline in here, right? You didn't see price follow. Do you see that? Do you see how price here didn't follow breadth? I want you to see that, okay? And just looking at this, it's very simple. It's like crayon drawings, right? You see huge price moves down, huge price moves down. And then in December, you didn't quite see that, right? You didn't see price following breadth down. And you're not yet at this point seeing it here. So at this point, do you see how breadth has come down, right? And price didn't follow. And you're now seeing this happen again, right? Price didn't follow. And you saw it again, price didn't follow. And you're kind of looking for that same thing over here. You want to see breadth come down, right? And price only maybe come down a little bit. Get what I'm saying? If you see that, it's showing you that there are large players, not institution size more than likely, but hedge fund size that are still long this market higher. Now, if you start to see the price of S&P 500 proceed or leading, right, faster than breadth is coming down, that's a scary thing, right? If you only see us like right here and price is blasting down, this is what is indicative of 2022. Then you can kind of foreshadow that we're not done, right? We're going to go way down here, right? You'd see something like that happen. So if you're a bear, you're looking for that. If you're a bear and you're like, hey, I'm bearish this market right here, this is the top right here. You do want to see breadth have not come down a bunch, but price just like leading. Wham, 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 wham. We're breaking levels. Those are things you're looking for, and we're not seeing that quite yet. Will we see it? I don't know. You don't know. We don't know as traders or investors. But if we do begin to see price leading the way down, you'll know, right? You'll know that it's more than likely not going to just be this little price down here, that we're going to start blasting through levels. So you're looking for that. Currently, at this moment, we're not seeing that, right? We're not seeing that on any kind of selling that we have. We're not seeing breadth. You can see it back here, right? This isn't a ton of selling. If you see breadth all the way at the bottom and you see us trading down here, you know, and the dip gets bought here, and the price has only come down a little bit, you can kind of figure out that we're right back in this area of balance, right? You see what I'm saying here? And as a bull, you want to be buying this stuff, right? If price isn't blasting down with breadth, they have no one else left to sell to. Make sense? And if you're a bull and you want to buy something sexy, right? I know bulls are like, I want to buy this, 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 and buy this, and buy this right here, right? So bulls are saying, right? They're like, I'm buying all this, I'm buying everything. I don't fear of missing out, right? So you get that little yellow box down here, and bulls are like, man, I want to buy this so bad right here, right? But there's a problem, and that's this right here. You see how we got a new high right here? We interacted and we blasted off, right? If we come down into this red line right here, we already did. We blasted off. If we don't get this reaction and blast off here, then what are we looking for? We're probably looking for lower, right? We're looking for lower at that point. And you can see back here, the support back here, right? It's like, well, Kevin Jim, then what are we looking for? And it's right down here, right at this S2, S3, right? You can see where the white and the red reacted. We could even actually trade down from here, right? Trade down here, and then roll over until this red line comes up back up, fight our way back up, and then we're off and running once again. Now, if you're a bear, you truly want to see price right now. You want to start seeing price start moving without breath coming down. Like, start moving. You start smashing through levels here. You're going to then start seeing that, Valhalla 3600, the 3065, that JPM wants. We're just not seeing that. Even with this inside day right now, we're not seeing. And I realize you had the spinning top up here, the doji up here, or this is the kind of a gravestone. This is the gravestone right here, right? Here's the gravestone right here. That should have been super bearish. Then yesterday, we actually got good news for the market. We got an inside day today, but this doesn't look to me like Bloodbathville down here yet. Not yet. You have to prove yourself to actually get down there. You know that buy the dippers are still in, and you know that J-Pow's out there, and he is. I mean, J-Pow yesterday was bearish, hawkish, but not the kind that we're going to 3,000 this week. If he keeps continuing to raise rates, there are still bulls. You can tell by price right now that there are still bulls looking to buy a dip. Right? Where is that dip? We just showed you. And there's two places that the bulls want to be buying. That's down here and right down here. Bulls want to be defending this. Right? They want to buy a dip here. They want to buy a dip there. Without a doubt, because this is trend heading higher, right? They love juicy dip buying. So we'll look at that one more time in the hourly and see where they are, where they want to buy. They bought this yesterday, right? And they're going to attempt to buy this again today or tomorrow. Likely you'll see some futures sellers trying to come in and sell this down below here by tomorrow. I would like to see at least this S2 personally. I would love to buy this big fat dip down here and like trade nice and free above. Then you got trap call buyers, right? You already know that yesterday, I guarantee it. Guarantee yesterday you had like call buyers like right here. Guaranteed. 100%. That's how it always happens. They don't buy dips, right? Top buyers constantly wait for trend and they jump on it and they're trapped. So you get what I'm throwing down here, right? And we're losing the daily right now. Losing the daily means they're going to try to sell all of these rips as time progresses, as like the day is ending. Who's we? Who's we? Not us, right? We buy the actual dips. Bring that back up for you. No, we will dip 20%. I don't see that yet. We don't normally, historically, we don't see that right now. And the price action in the market right now is not indicative of, or at least yet it's not indicative of that. If we start doing that, if price starts blasting down, I'll be all game on board on that trade. But currently it's not showing us that ass blaster move down. You can see that we don't have any velocity in this move down. You can see that you might get one more capitulation move down below, probably down to this 408 or even this 402 down here. It's not really. This really isn't too much of a move. I think I would guess here that bulls want to see this so that they can buy a tradable dip. This is like a dip that you don't have to worry about. You don't have to like paper hand it. Where you're like, yeah, I got my 10%, I got my 20%, and I feel safe buying a dip. So that the safe dip buys down here for bulls. And that is the truth. We'll talk about so I don't normally buy puts only because they're not built. So puts are kind of a weird thing. Calls are built to be bought and held. They're also built so that they print better, believe it or not, than puts, right? If I buy a put for 50 cents, let's say, right? They're generally speaking good for the move only. So bears have a tough go of it, right? short is not bad. I like shorts, but I don't like puts. I don't mind puts on SPX, but on the SPY itself, they're typically built, or not typically, they were built originally as a market hedge. And we'll talk about that at some point too. So where we are in the market, puts are cheap, right? So we're in the early bear market of 2022, puts were expensive, and they held some of their value. You could sell the market, hold puts, and they would print eventually, right? Very good to own puts then. Actually, very good to sell puts and sell calls. Right now, it's better to be buying calls and buying puts. So even if you, let's say, so I own Tesla stock, right? Even if you don't own Tesla stock, it's really cheap right now to buy a hedge. So there's no reason for you not to buy a hedge that's dirt cheap. And if they print, it prints. So I was last Friday when we were at close, right? We were on the close on Friday. Let's see if this is an actual dip here. Hold on, let me see if this is a good dip buy here. So let me give you an example, okay? So last Friday when we were closing out, I was like, I'm holding. Hold on here. I'm going to do something here. So last Friday I was holding Tesla stock. And I got to unmute a bunch of this stuff here. So last Friday I was holding Tesla stock. And this is indicative of a bull run, not a bull market. Make sure you guys out there know the difference between a bull market and a bull run. There are two different things. A lot of like misspeaking on the internet I see, which is kind of makes me laugh, kind of makes me giggle. So not laugh, but just giggle. Now, we're gonna turn the bear lights on here, man. Now, but here's the point. When I went into the close on last Friday, I owned Tesla stock. I was able to buy, I think, a 41-cent put. I couldn't lose. There was no way for me. It's funny because I ended up doing really well in that trade because Tesla went up and SPY puts printed. They printed like when on the opening bell was like 71, 72 cents or something. I closed those out and Tesla was like up $3. But that's like the best outcome. Now the reality though is if Tesla had gone down and lost $1, $2, $3 on the underlying, my cheap puts would have printed any loss that I had in Tesla, right? If Tesla had gone up $1 or $3 on Monday open, the puts would have burned, but I would have been a net gain of a couple bucks. Does that make sense? So right now, it is good for you to own puts, like a market hedge, not like, hey, I'm bearish and the market's going to go to the depths of hell. It's really good, even if you don't own stock. It's good for you to own a market hedge that's like bloodbath. Like, oh, these cost me 10 cents. These cost me 20 cents. And I don't mean like a zero date. You should be going through the option chain and like finding a month out, 3 month out, 6 month out. So if pretend we're back in January of 2022 and puts are cheap, right? You just start throwing some on and you're like, well, Cap, I don't want to do that. We're going up, man. We're super bullish here. My point to you is, they're so cheap. You guys make so many bad trades out there. I hear people out there telling me, yeah, I'm buying $5 calls, $2 calls, I don't know, fucking $10 fucking calls. And then I'm like, do you have a hedge? And they're like, no. And I'm like, they're like 10 cents a month out. And they're like, they're never going to print. I'm like, that's not the point. These are built, well, right now is a time to buy a hedge on the market because it's so cheap. If it's 1, 3, 6 months out and they're this cheap, it acts as insurance. So you want to add on like a daily, like so myself, at times I'll add on an overnight zero date put because I own the underlying and I don't want to like wake up on a Monday morning and have some kind of nonsense, some liquidity crisis or credit crisis or whatever kind of nonsense you want to say. When the reality is they're probably just front running some kind of a Fed put, some kind of a rate cut. And you just don't know about it as a retail trader. But my point is, puts are cheap. So you should have some, like a little bundle of them. You should add them every week. I had like month out, 3 month out, 6 month out. Make them dirt cheap, like 10 cents, 5 cents. I kid you not. You can do triple leverage ETFs. There's a bunch of those out there. I like trading the SDAO. Gets dirt cheap. And if you can get them at dirt cheap, right, like 20 cents, like when we're elevated, they're like $2-3 to own. But they hold value over time too, right? Like 6 month out SDAO hedge is awesome and cheap. SPY not so much. SPY, especially if you find interest. What I like about SDAO is you can actually dig through their options chain and you'll just find like one strike 6 months out that it's just loaded. And I'll be like, oh, that was a bunch of interest on that one. And they're dirt cheap. I'm going to buy those right there and hold on to them for a few months. So this is so my point behind how puts are structured on SPY coming or swinging back around here is you need to time your puts right now so that they print right directionally. Like if we're going to bleed off, let's say you bleed off right here, right? You literally need to buy them and then cut them loose right at your price target. It's not like I can hold calls here not all day long, but I can hold them here for 15, 20, 30 minutes, half an hour, whatever. And if they go up a little bit, I'm probably going to print 50%, 100%. And they'll likely hold as well. So for myself, I'm just looking for a dip, mostly. If you're asking me what I do, I'll jump in on some puts for a trip lower possibly. But generally speaking, I'm either using them as protection right now, as a hedge right now, and I'm just looking for a dip to buy. If price starts to accelerate in the down, in a downward move, I'll then start considering trading puts or putting shorts on, that kind of stuff. So for me right now, it's not. There's nothing that's saying right now that the market is going to crash, and so that means buy some cheap hedging. Yeah, I'm looking at it right now. We're still not above. The one good thing bulls have is that the one good thing that bulls do have right now is that the daily is coming up. It's screaming higher. If we continue to trade sideways like this in the next couple days, we will likely get a nice face ripper coming out of this. It's going to take a couple days, 2-3 days, let them rotate and shit like that, and we should get a nice fat rip, nice fat market rip in the next couple days. What day is today? Wednesday? Hopefully we can have it by Friday or Monday. Nice Monday gap up. See if I can look at this 5 minute here in the background. Starting to lose the 5 minute. Bear's trying to take this down right now currently. Let me see if I can show you guys some cool stuff in the background here. We'll see if we can turn some bear music back on in just a moment. Let's see if we can start selling this. And let me see if I can. Okay, so here's the trigger, okay? This is velocity down below. You can start to see us selling, teeing right off. You can see velocity declining. You can see this is the zero line where my cursor is. Tried to have some velocity here, starting to break below it. You can see when velocity breaks below the zero line. See the zero line over here? We'll start to bloodbath it down below. We'll look at velocity on multiple time frames. So the 5 minutes being lost right now. We'll look at the 1 minute. You can see we're losing velocity in the 1 minute over here. You can see we're losing velocity in the 5 minute. On the 15 minute, it's about to break down here just a moment. Should get some nice blood here in the market. And then we'll look at the hourly. And you can see we're losing the hourly right here. And then we'll look at the daily. And this is the one that I don't like. The daily is what I'm not liking right here. And you see these 4 bars right here where we've lost price. You see these bars right here where we're losing price. Watch my cursor over here, right? And you can see the start of that right here. Okay? Now, until we get above that zero line, I'm going to expect each day to grow shittier and shittier and the bears to get some acceleration at some point to the downside. But price isn't we're not really seeing huge price loss here. So for myself, I'm just still looking for a dip buy. Just looking for a dip buy. You guys want me to buy some? You guys want me to buy some 3-day puts with you? Follow my cursor. Follow my cursor. Isn't that what the goat says? I used to watch him all the time, man. Follow my cursor. Follow my cursor over here. That shit just stuck with me. I'll never get rid of it now. It's like embedded in my brain forever. I fucking love the goat. He's the man. He is the man. If I could, I don't think he'd ever let me. But if I could ever like spend like a month just gag myself and listen to him, like put a choker in my throat and just get on my knees and just listen to him for like a month solid. And imagine being your mentor, man. Unreal. The U.S. blew up Nord Stream. Yeah, dude. Like I gotta hang out with a room with if I was trained in a boiler room, I could sit next to him all day long and just listen to every story he has. Totally. I can listen to him all day long. I go out partying with him. I go anywhere he goes. There we go. Let me know in the give me a second here. Let me I'm gonna do a poll for you right now. I'm interested to see what bulls think here. You guys want to we'll look at Tesla right now too. If you want to tell all your Tesla friends out there, we'll talk about Tesla. We'll do Tesla talk. We'll do Tesla hour. Let me bring something up in the background here. We'll do a little. Come on now. We'll do a little Tesla talk at some point here. Do you believe my take here, I guess is the question. Engage with my audience. I don't want to add any fucking ads to this shit. Start a poll. Okay. Do you agree? Do you think we are going down for at least a few days? Let's find out if the audience is smart or not. Or not smart, but because our audience is usually pretty smart. 1, 2, 3 days. For a dip buy. We're going up from here. I don't think so, but I'll give it to you. Hold on. Try to answer honestly to help your fellow retail trader out. 1 to 3 days for a dip buy. We're going up here, and then we'll just give it to the blood. crowd. Okay, so I'll ask you guys this question. I think we're going up, or I think we're going down. 1 to 3 days for a dip buy. We're going up from here. Or do you think? Try to answer honestly, not your emotional state. I know the Bears been getting kind of fucked up out there. You guys kind of have my take on this, where I think my thought process so far without anything else being validated, it's 1 to 3 days down. Today probably down. Tomorrow probably down, and then we'll find some kind of a buyable dip, unless we see acceleration in price. More than likely, just looking for a dip buy. I don't think we go up from here. Nor nothing's showing me yet that we're going up from here, at least. Now, there's one other option here I should have put on there, and that would be where we trade sideways. If the Bears don't get some acceleration to the downside, if the Bears can't find real selling in here, it is possible. This is actually the second most probable. The second most probable outcome here is here. Hold on here. Let me mute this real quick. So the second most probable outcome here is going to be. So we got what says Wednesday, Thursday, and Friday, right? Do this on a 15-minute here. Second most probable outcome is going to be just trading sideways until we find that support. So we've got this little bit of support right here. We'll leave this for next few days. And this is where we'll find out where real demand is. Hold on here. Hold on here. And you can see where it is, right? It's right down here. It's kind of pushed it up, went, did a leg higher, trying to find some acceptance. So this would be the next support for the bulls down here. And then we know if we break below this true price range here, we're heading much lower. True range somewhere in there. And then down here. Right down there. I don't know that that's real. That's not real. It's like right there. And then let's look. We don't have any previous. Let me go back to the previous highs. Retest above. Seems to be good selling in here, man. Really good selling. Lots of vol all the way up to R3. And I wouldn't even give it to the bulls. The bulls to have a new run is way up here. You can't even really be a buyer here, like long term, unless you get above this. Like the real buying is down here. Somewhere down there. So you buy this, run that up. Need to get up here, retest to actually buy. To add to like an equity position, you have to be up there and like win a retest way up there. You believe that or not? You might not know that. To be long this market. See if I can come back. Like truly long this market. We'll extend this over. Let's see where that is now. At 412.09. It's the same place. No, right there now. That's where the Bears are. Got 106 votes on the question. Let's find out what you guys are thinking.
Neto Stoltenberg says, I am seeing increased Chinese intelligence activities in Europe.
No, that's not true. It's always been there. I was, on that whole Chinese balloon thing. I didn't really make too many comments about it, but I found it kind of funny. I was in the military, and not only was in the military, but at one point I was with U.S. Army Command, and at times I was stationed on Air Force bases. Believe it or not, the Army sometimes interacts with the Air Force, and what you guys are fed on, like the CNN, Fox News, doesn't really matter. Is not anything. Zero basis in reality, especially when it comes to our national defense. It's all just bullshit, all of it. And anyone out there that's a veteran knows this. Hold on, we'll finish that topic here in just a minute. So, do you think we're going up or down? I'm going to end that poll right now. But I'm not going to speak too much about this as I can't. What do we got here? Do you think we are going down? 1 to 3 days for a dip buy. 59% of you think that. Blood, 21%. That's interesting. That's a high number. Blood. It's a very high number. And then we are going up from here 19%. I think both of those are very high numbers. I'm actually quite surprised that 40% of you think we're in a very volatile place right here. I'm fascinated to find out if you are either thinking we're going to scream higher here or scream lower. What data are you looking at that supports that? I'm fascinated. I'm not like being facetious here, or I'm trying to talk down to you or anything. I'm interested to know what's screaming to you that the market's going to either go to the moon from right where we are or bloodbath down. And the only thing that don't tell me is what someone told you on social media. Like, what is it? Because if I had like trading rules for when we're going to crash, I'm really looking for something. And I really want to know what you think about that. And I'm going to do something here in the background. And the reason why I'm asking you, I'm going to show you why. Especially the bears. I want to ask the bears. Hold on here. Give me a second here. I gotta. Okay. So if you're a bear, I want to show you something, okay? And you explain to me what you think of this. So we'll stay here for you right now as we squeeze higher. And I want to show you something, and then you're gonna show me something. You can show me something. You want to see something cool? If you're a bear, I got something for you. If you're a bear, or your bear friends are out there, tell them to tune in for like 15 minutes. Not your bear friends, like your collapse. If you're a collapse bear, like we're like market collapse tomorrow, anytime this week, this month. I don't care if it's next month. You're a market collapse bear. You're like, we're going down to, I don't know, 3,000 from wherever this rollover point is. Let me know, or go get your friends on Wall Street Bets and Stock Twits and I don't know, FinTwit, Yahoo message boards, investing.com futures message board with the old fucking guy on it. And because I know what he's gonna say, just buy the SPY, right? So we're gonna look at this real quick. I know you guys are all like, don't do it, don't get off the where we're at. we're just going to take a look real quick. And I want you to see something here. So I want you to see momentum, okay? And I want you to look very closely at something, okay? And you can see back here, right? You see this momentum started dropping off here. See that peak in momentum, right? We huge climb up, right? This one, not so much. We did start to see it. I don't know how many of you guys are trading before 9/11, or trading before COVID, but if you weren't trading before COVID, we were already expecting a decline in price of the S&P 500 before we ever got to the COVID crash. There was already talk of the market rolling over, and you can actually see momentum going down, one last rip higher, and then bloodbath. Now, that was COVID, right? That did this. Whether you believe in COVID or not doesn't matter. They did shut down our government. They shut down. So this is like an or an anomaly, right? Why we blasted straight through here. In effect, this sped up what should have happened, right? This should have taken place over time, and instead it was just a straight blast down. But this is kind of neat, right? So what we'll do is we're going to look at the rest of velocity over here, just currently right now. And if you look right here, right, you see this declining velocity here? And I'll snap a little line for you to take a look at it so you can actually see where we started decline in velocity. And we continue to decline in velocity, continue to decline in velocity, continue to decline. This is kind of predicting the market rolling over before it happens, right? Seeing the market roll over in real time. And not only that, even though price comes higher here, we come back down, right? And we're actually squeezing. Do you see the squeeze here? The bear market rally. Remember a bear market rally? See that bear market rally right there, right? And what is happening while we're having a bear market rally? Velocity is still going down. Do you see what I'm saying? Rip higher, bear market rally, right? Price still leading down, momentum going down. And you can actually see a momentum shift, right? You can start to see dips buying bought up here, right? This is in summertime. We're like, oh, the bear market rally might be over. Still below the zero line, though, right? So still a bear market rally, right? Down here, still kind of a bear market rally down here, unconfirmed. Little peak above up here, right? Poked our heads up above. Down here, we're still losing momentum, right? But here's the key difference. You can see it right here, right? You can see it right there. That's that first check. And you're seeing it start to happen again, right? So if we start to see price trade sideways and yet momentum come underneath, right? That's a signal for us that we're going to start blasting down. But we're not seeing that yet, are we? So that's why that's my only question. You'd have to have some kind of an event where, you know, we're like straight down here with a bar. That would have to be like a COVID event. It's not an event like cut rates would do that. But outside of something like that, normally you'll see declining momentum on the SPY. We're just not seeing that yet. So unless you get some kind of a wild ass event, like something unexpected that we don't see, like we're closing down society, I don't know, a war of some kind, something like that. Like we know, we had Jay Powell the other day say we might need more rate cuts. He kind of like rug pulled an unknown event, right? He told us before he'd be more transparent. He's been more transparent. So I guess my point to you would be if it's a known event, you'd likely begin to see momentum trail off as price is going to head down to 3,000. You wouldn't see momentum rising right now. We are seeing momentum rise right now. So I guess if you're a collapse kind of a bear, at this point, your argument has to be a fundamental shift in Fed policy, which we had at the Fed rate decision, right? He said, Jerome Powell said, we might need to do more rate hikes. And then his little Fed presidents have said the same thing for the past couple weeks. And then yesterday, while he was, or 2 days ago when he was giggling, yes, it was yesterday. Jesus Christ. I haven't slept in like 40, I don't know, it's 48 hours. I've been trying to get this computer shit worked out. But he intentionally, this is the grossest part, right? He's intentionally, in his own way, instituted some kind of a Fed put, right? Like a backdoor Fed put on the market by saying, we're not done with rate hikes. And so now you're like, oh shit, if he's not going to pivot, or if this isn't our last Fed rate hike, the timing's wrong, right? We have to sell that news. We have to sell a pause. We have to sell a pivot. We have to sell the end of rate hikes. If he announces that we're stopping rate hikes, that means he's done his job and broken something, right? So right now he's basically saying, nope, we're pushing the recession off right now. We're not going to declare a recession today. We're going to wait. We haven't broken anything yet. The labor market is strong. So the moment he does something like that, we don't have like a known event that's been pushed off, right, to sell the market. So what you're looking for, if you're a collapse bear, my assumption is here, momentum is still strong in the market. Like price isn't still going up. Like the fools, they always talk about dumb money, smart money. In reality, the smart money is buying this market. The dumb retail money is not. This is very smart, but it's not the bank money. They're the big elephant. But the hedge funds are buying this market. The hedge funds are buying this market. They're driving it up. And probably that statement yesterday was geared towards those people. And they wanted to hear it over and over. It's probably a backroom meeting where someone from some huge hedge fund said, I want you to say it. I want you to say it publicly at that meeting like 10 times, which is kind of gross. The only other thing I think of would be like I've heard people say like the credit event, right? Yeah, I think that's a valid statement. You have to have something that's unknown at this point for us to start plunging to the depths of hell. I think you do. I think if you're like collapse bear, I think if you're a Michael Burry, I think Michael Burry's truly on Michael Burry's when Michael Burry said sell. My assumption is that Burry thought that there would be some kind of an announcement. I thought that there would be an announcement. I've been waiting for a Fed pivot or a Fed, any kind of a Fed pivot or pause in rates myself as well, right? Because that would signal sell the market. And I think even in that meeting yesterday, Burry's out there more than likely going, it's all about the verbiage that he uses, the words that he uses. And the moment that Jay Powell is out there telling you craziness like, yeah, we might have to do more rate cuts or rate increases, that's the shit that a bear doesn't want to hear. The bear's just historical precedence says you don't want to hear that. Even in people are like when Volcker was in power, the market went down. It didn't. It actually went up. It ground higher until they cut rates. It just kept grinding sideways and up, sideways and up. And the yield curve works but doesn't fully work. You want to see like rate cuts, the yield inversion bounce and start trading higher, unemployment be high, all of these perfect things and perfect balance. Jay Powell even said yesterday, we're unemployment is strong. What are we going to do here? Right? So none of these mechanics are lining up right now for that collapse kind of a thing. I guess you can hope for the collapse. Like if you're like that 20% that's like, yeah, we're going to collapse. The good thing for you is, if you're a collapse bear, is that puts are dirt cheap. It's the perfect time right now to buy some of those collapse 10-cent puts that are 6 months or a year out because they're dirt cheap. They're dirt cheap. And you can probably add them again in 3 months. And you can add them again in 3 months. Yeah, E-Trade and Shorts is saying it'll be a geopolitical event. Yeah, it's got to be some kind of like unknown news, something that's not priced in. I see people on social media, they'll be like, the recession's not priced in. I'm like, it is priced in. There's only is either an unknown event that the banks don't know about, or the banks already have a plan for when we sell the market, when we buy the market on known events. Even if you don't know them, they know them. It was very key, man. Yesterday in that meeting yesterday, or that luncheon or whatever, the economic luncheon that they had or whatever, they were harping on the labor market, and they were harping on we might need to, like, it's crazy. Remember the thinking about shit? He was basically saying we're thinking about more rate cuts. That blew my mind seeing that shit yesterday. I was like, man, like, they're doing it. They've pretty much have slapped a Fed put in the market for right now. We're not going to see 3,000 like next week, and I truly believe at that rate decision, had they said, we've got one more left, that's the last we're doing. The moment they said that shit was on. You probably would have seen a squeeze up and then a blast to hell. Like, do you want to see 3,000? Lickety split, we would have seen it. Lickety split. We would have plunged in the depths of hell. And you should keep your eyes on that too. If you're a collapse bear, you're waiting for. Remember when he said, like, the change in the change in tone, the change in direction, any kind of change in verbiage. You're going to be looking for that change from we're thinking about more rate cuts to this is the last one. We're pivoting. I promise you, we're not promise. Probably like an 80%, 70% chance that we blast down. Yeah, I mean, I showed you guys. I posted on at Captain's Alpha, or somewhere I posted on at Captain's Alpha or Captain Jim James. We had forward PEs down to 16 or something, right? That's pretty low for some kind of a bull run. 16, and I posted another chart on FinTwit about Chenos, and I'm like, these guys, you've got all these old guys, you got all these like fucking 80-year-old white men, white fat billionaires that you're trying to trust. You're like, you and I are plebs. We're nothing. We're like the smallest we're like shit on their heel. We're the shit on the heel of a billionaire that's out there telling you at this one moment in their life, right? They're like, "Oh, I've come to Jesus," or whatever. I've come to the spaghetti monster, and now I want to see PE ratios down to 14 and 10 and 9, and I'm like, well, let's go back and look historically and see if they've ever done that. Sure than shit. Even before these guys started trading and investing, when they were kids, their predecessors stopped buying at 9 on bottoms, and they were buying at 10, then 11, then 12, then 13, then 14, then 15, then 16. So you're talking 2 generations ago, they didn't do that shit. And so now, all of a sudden, this one time, this is it. Well, if you look on a forward PE ratio chart, I already posted it on FinTwit, they bought this one. These old, rich billionaires, they bought it. They put some risk on, they bought it, and they're telling you not to. They're not going to come. Some fat old rich billionaire is not going to come out.
Gasoline March futures settle at $2.46 a gallon.
There's a story. Right in the beginning of hedge fund market wizards.
Crude March futures settle at $78.47 a barrel. That is up $1.33 or 1.72%.
There's a story right in the beginning of hedge fund market wizards where it talks about the price of commodities, right? And how you've got wild ass pricing all over the place, and then like the king or something. I don't recall exactly how it went, but basically the king goes out and says, "No, we're not doing that. Everybody pays the same price."
NYMEX diesel March futures settling at $2.89.
I know it's like everybody pays the same price or whatever. But eventually the king takes those price controls off, and we get more wild ass pricing. And like the jester or somebody goes around and he knows that you've got like a bushel of wheat for 5 cents, and he knows that it's going to skyrocket in this place.
NYMEX
like
natural
to
gas
$1,
market
from
futures
5
settling at
cents to $1.
$2.39.
Until the king comes back and regulates pricing. So, of course, the jester sends his buddies out there and they make bank. And that's kind of what's happening right now. It's kind of what's happening right now. Before the government comes back and slaps it all back down, there's someone on the inside, the court jester knows that before the Fed comes back and slaps the price down, they have an opportunity to make bank on a bottom. And that's what they're doing. You got if any, I've never read Hedge Fund Market Wizards, but if any of you guys have read it, read the first like 20 pages. Right there is exactly what took place in October and December. Exactly, it's the exact same. As a matter of fact, part of that passage comes from what do you call it? The Stock Operator book. The I've got it on the shelf over here. I read it many moons ago. Still holds true to today, which is mind blowing. CPI. I don't know if that's a big event. I think if you're a collapse bear, you're waiting for either an unknown event or you're waiting for a policy shift from the Fed. If you're not waiting for the policy shift in the Fed for like a big event, you're looking for them to front run it. So if we get our next rate hike, and maybe you wanted to front run some hedging there or something like that and see if he changes his language, I guess you could front run it by a month to 3 months. I think that's possible. But currently, it seems like they're pushing out it seems to me like they're pushing it out to at least late 2023, if I had to guess. As a matter of fact, I was looking at, I was with a close friend of the program, I was looking with Vol Wiz one night at, hey, how do we short the market on shit nobody's in for like 2025, 2024, 2025, somewhere in there, where everyone's not loaded to the tits on, I shouldn't have said that. Oops. Everyone's not loaded up on bearishness into like, everybody's got like, you guys haven't seen it, but there's like tons of puts for March and June. Like SPX Inspire just loaded with with Doom put options. So I'm like, man, we got to get something out there in like 2024, 2025, and then just collect the premium on that shit once everybody loads up on that stuff. Hang tight right here. Yeah, puts are cheap. Chase, I can't say no to you. Like, if you were loading up on puts right now, they're dirt cheap. Even if they burn, it doesn't matter. Just the cost of doing business. I understand buying puts here. I understand buying them like for the next 3 months, buying them again. They're dirt cheap. Absolutely dirt cheap right now. You guys want to talk about the JPM caller? We can. You ready? Let's talk about the JPM caller. Absolutely, we'll talk about the JPM caller. Oh, let's look at. How about this? We'll do Tesla next, and we'll do Tesla, and then we'll do JPM Collar, so you guys have a better understanding of the mechanics of it. The simplified. We'll do the dumb trader. We'll do the dumb trader. I like being the dumb trader, at least I should say that. We'll do the dumb trader. Let's see, one day. We'll do the dumb trader understanding of. So let's take a look here at Tesla. So we'll do the 1 hour chart here. And what Tesla gang needs. So Tesla broke above its trigger right here. Its next target above is 221.49. It likely won't trade directly to that price. You'll likely see Tesla come up here and attempt to get to this 220. With that being said, you'll see this green bar. We'll check this every day for you. As long as Tesla retests here, its green bar, it's still good to go to this 220, 220-ish, 224. If Tesla can break above, I don't think that it will. I think it'll reject the first time. The real scary part is above right here. This could be a massive, massive bull trap above, and I'll explain this to you later. But for right now, the basics that you need to know is if Tesla can get above and hold this 220, it would confirm that a corrective action on Tesla is over and done with for right now. So you would see the correction over this. The orange line that you see would confirm the correction being over on Tesla. You should expect a price target still above. As soon as we get above 196, you should see a price target above of that two. It's right now it's currently 221.24. And you'd be wanting to buy dips down here at currently at
Brent crude futures settle at $85.09 a barrel, which is up $1.40 or 1.67%.
You do not want to see a failure of 196.17. If you do see a failure here, let's say we lose velocity here, come back down and break underneath, this would be really bad for bulls. This would just be confirming that the bear correction is not over here. This is very bad. So bulls need to stay above 196 and try to attack this 200. It's 220 right now. It could come down to like 216, 219, somewhere in there. But the real key for bulls here is they want to see if this comes down like this. Bulls really want to trade above, hold this, and begin new price discovery on high. This would confirm the end of the corrective action. A trade above, let's say, 216 to 220, or a hold above 216 to 220 would end the corrective trade on Tesla. Let me see if I can show you this on a better time frame here. Yep, and you would see a resumption for Tesla. If you can see that happens here, we move up. We're going to start to go up and start to attack these highs at 310 and stuff like that. This is a pretty big move ahead right here. The one concern here is that you will see at some point sellers attempt to come in here and sell this down. They don't want to see price go from 220 to these highs above here at 330. So just keep that in mind. This is actually the largest part of this trade right here, a big monster move to go higher. I'd have to disclose to you that I am long Tesla stock, and I will be buying puts once again right as we get up into this 218, 219. I don't want to see any kind of a huge rejection here and start smashing levels and getting down to like 95 or 65, that kind of stuff. You start to see something like this, make sure that you have some kind of hedging. You don't want to see anything like that right there. That would be really, really bad right there. And this we'll start breaking. You start seeing major selling coming in right here. We'll blast through these levels. So pay attention up here at this 220. If you were going to start to cut yourself, another option would be take profit on your longs on Tesla here, and then wait. You cut your longs here. Let's say you get out at like 196. You probably see that happening as well. People selling out, and then they're going to be looking for price to go above right here, and then they would pick the long Tesla trade up again somewhere in here, right? So if you sell your Tesla stock as we head up to this 220, you wait to you will definitely get an initial. I'm telling you, you're initially going to get people taking profit on long stack Tesla stock and allowing more people to push up. So you could take money here at like 196, and then not 196. Excuse me. At I keep saying 196. I mean 216. You could take a profit at like 216. Wait for price to hold above 220. Then you'd re-enter long on Tesla stock above up here. Right? So you could do, there's a bunch of different ways you can do this. I don't particularly sell calls on Tesla, but if you wanted to, you could sell some calls as we head up into this 216 area to fund yourself, or you could be selling puts once we get above the 220 and hold it. But our target above is 221 or 220. Where's where we at right now? We don't normally hit this exact, so I would expect some selling to come in around 216 on Tesla. Next thing we're going to look at is, give me 1 second here. Next thing we're going to look at is SPX. We're going to talk about the JPM collar and show you guys the JPM collar here. And hold on here. I thought I had another way to do this, but I'm not seeing it. But we'll talk JPM collar here. What does the JPM collar have to do, or we'll talk about what the JPM collar is briefly, and people that follow it, other banks that follow it. Its impact on the market. We'll just be brief here. I've gone over this like ad nauseum at this point in the channel, and so we're just going to keep it brief. I'm not going to explain all the mechanics of it, but I'll give you an easy idea of the mechanics of it. And its role in the market. So just briefly, if you're, let's say open up Captain Jim James pension fund. I want my pension fund to give consistent returns every year. So I want my pension fund to hands down give consistent funds. I want some stability. I don't want volatility in the market. I want to present a pension fund plan to you. I'm like, okay, Captain Jim James pension fund. This month we made 10%. Next month we made 20. Then we made 15, 17. Then we had a banner month or a year. We could be by the year, by the month, doesn't matter. 1 year out of 10 years, I had one bad year. It was pretty consistent. So these big institutions, these big banks, they want to limit volatility in the market so they can give consistent returns. If you had true price discovery, let's say on Tesla, Tesla would be wild, right? It would swing, it would scream higher, and then there wouldn't be enough buyers that could afford it, so it would scream back down, right? You'd see all kinds of nonsense. We'd throw a piston here and blow up our stock market. It would explode. We'd have a big implosion, right? Big kind of a nuclear explosion in the stock market, and our stock market wouldn't function. So there's a reason for hedging. banks, financial institutions, their playground. They try to limit volatility within the market. Now, they don't always get to control volatility. This brings us back to unknown events, especially if they don't see it coming, right? Or they're being too greedy. We've got, I think it's 3060 somewhere down here. I think it's 3060, 3060 right here. Right there. Let's just say it's right there, okay? For shits and giggles. We got 360, I believe. This is the other one. Somewhere in there. And then we got another one. 4060, I think it is. I could be wrong on that, but I think that's where it is right now. Where it is. Right there. Okay. So, they need to fund, or not need to, they wound up funding their puts, right? Their put spreads. So we paid the put spreads above, right? Paid them. And now all they want to happen here, all they need for it to happen, so that they've got free puts, right? We know that they've got free puts. So we've got March 31st right here. They bought their free puts. Now JPM doesn't care if we go higher. They don't care if we trade higher. Their market hedge, though, limits us blasting off to all-time highs, or acts like, because we got a magnet down below here, right? Anytime bulls lose strength in the market, there's a little magnet down here that's gonna want to. I would say that's when you hear like the term melt up. It's because of the market hedging that's on the market. So what you'll see is we'll grind. Bulls lose momentum. We'll start pulling back down. Bulls start going, yeah, we're bullish here. Grind back down. And the reality is, they don't care if we trade down to the depths of hell. They don't even care if we trade down to 3,600 at this point. The only thing that they care about is that we close down below this 4064 by the 31st. That's all they care about. They've made their money. They have their free puts. They've had a pretty decent return for Q1, and they've limited the craziness in the market, right? So they've killed all these birds with this one stone. So in reality, if we trade up higher here, we get to 430. Even if we get to 460, as long as that magnet's down there, and now that those puts are so cheap, we should at some point try to monetize those. If they're like 1 penny, 3 pennies, 10 pennies, 20 cents, because there's that high concentration, towards the end, we'll get that. We'll end up getting that that JPM print at some point here. They'll be happy. Now, if we get real money selling, real institutional money selling, down here, it's bonus time for JPM. If we start really blasting through down here, it's like triple bonus time. Everybody's going to the Hamptons, then we're all heading out to Ibiza, and we're going to go to Davos and have fun and all that kind of stuff. But as far as JPM is concerned, they've already won the first half of their trade. All they really need is that magnet down. There's one magnet here, and there's another magnet down below over here. And all they need is for bulls to, yeah, we got 430, yeah, we got 460, and then we trade below for the 31st. There is a high probability of us, no matter where we trade, that at a minimum, we will trade below this 4060 on March 31st. Almost, not guaranteed, but a pretty high probability. Now, at this point, we haven't had any real money selling. J-Pow has told us something different. So the likelihood of 360 is becoming less apparent, and certainly 3065, unless they can create some shit, unless BOFA or some unknown news comes out, there's a high probability of us now, no matter how high we go, that we trade back down into here. That looks kind of right, doesn't it? Something like that, right? Maybe we blast down here for a minute and tag this here. That's a possibility. But the high probability trade is right there. This is the second high probability trade at this point. But you guys already see it. Week end of February, come down here, maybe trade back up. You can actually see it. You can actually see the JPM call in real time right here, right? Let's just snap a quick line right here. And right there. I mean, this is the path of the JPM collar at this point, right? Come back down, trade back up. Bears are like, hell no, we're going down to that 360, and then we'll pin back up here. Actually, we don't even have to do that. We could just trade down here, pin right there. We could trade up here and then send it right back down into it. Bears are like, no, we're going down to the depths of hell into March 17th. I don't see that as probable. I see these two as being the probable conclusions to the JPM collar. At this point, they have a free trade. Do they care if it prints or not? They don't. A great example of their them not getting the print or the closing price down below, like 3,000 or 3,600. September 2021. You can look that one up. September 2021, we blasted down to 36. Well, not 3,600. I don't know what price was then, but I can't stop me to remember. But we blasted down. You can actually see. I'll show it to you right here. Bring it back up for you. If you look right here, this is 31st right here, and you can go back and on your own time and just look up where are we at? Right? Nope. Right there. Right? And just look at this. And we ended up blasting all the way up, right? Couple dips down, just kept on grinding higher, grinding higher, grinding higher. They have their free puts right here, right? Market's going up. The underlying they're making money on, they don't even care, right? They don't even care. So if you're a huge bear on the collar, they paid for their puts. If the market goes up from here, they don't care. We have a likely pin down below at 4060. They would like to see that. If they don't see that, the underlying that they own is going to print. They've basically, their hedge has worked at this point. So there's no requirement for us to go down. There's no requirement for us to trade to 3060 now. We just need to see some real money selling in the market for that to happen. Hi, Matthew Ryan. What's up, brother? How are you? What is going on, my man? I haven't had a chance, bro. So I apologize, Matt. I've been up for like, I think, not quite 24 or 48 hours. On Monday, I think I spent a bunch of time on the phone with a friend of the show trying to repair my setup, and then I dropped it off, and then I yesterday traded, and then last night went out to Micro Center at the end of the night and got a new rig, and then worked on that shit till like 6 a.m. I shit you not. Stone cold sober too, which is even worse. And then woke up this morning at I think 10:30, and I was like, uh-oh. So good to see you, Matt. Good to see you showing up, brother. Yeah, like where we are right now, the daily is catching up to the SPY. Daily trigger's kind of just riding up in the background. Bears are not seeing any kind of a follow through right now. Bearish momentum is waning at this point. Buyers are just all on board right now. All on board right now. I doubt I'm. Oh, I just want to get my cheap dip buy, man. Just give me my cheap dip buy. Yeah, I appreciate you showing up, bro. I saw those kick-ass posts you made yesterday. I was trying to retweet them for you. You had some solid stuff coming out. You were dropping fire on FinTwit yesterday. Give me a second here. So I apologize for not giving you a shout out this week, man. I've been crazy. What am I looking for here? Bam, 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 bam. Okay. Yeah, you guys want to look at some where do you guys want to, so we did the JPM collar, we did the Tesla gang. BBBY not looking good. It wasn't I'll look right now, but it wasn't looking good the other day. We'll look at UNG too if you want. I do recommend that you follow James Rowland. So let's look at BBY real quick. And James Rowland is kind of your guy for BBY. I know that we did we've called two squeezes so far, right? We called this one right here. I didn't call this one right here, but I did help out this one right here, but this one right here I think we did right here. We got some we have some functional problems here, so yeah, this one right here I missed. So this one we'll talk about right here. We go to the 15-minute here, and we're gonna take a look. And I think I posted on FinTwit at one point. I had said our first price target was $5, and then second price target would be above here. Let's look at it. Where was it? Right up here. So if you can go, I think it was price over 314, you'd see $5. We saw that, we blasted through, came back down, retested, and then you're looking to hold $5, right? So that you can go up and try to tag this this $12 mark above. And what you can see is that that did not happen, right? Now there was an opportunity to unfuck yourself. If you were to unfuck yourself on the underlying, if you had time, and we're gonna look at that real quick and show you how you had the chance to put stops in, limit stops on the market, and you can see it right here, right? Traded up, slammed through the $5 consolidation down here, right? We blasted through. This is your $5, right? Stop limit. Now, even if you didn't have stops here, you can see that this is where a large player is caught with his pants down, right? Blast down, come back up here to confirm the $5, right? And we start trading down right here. So even if you had missed the first blast below 5, the moment we triggered that, you could see that we rejected above and started to sell back down. The moment we're right here, boom, trade's over, right? Come back down, find some support. We start getting sold on the 1 and the 5 minute, rejection on the 1 and 5 minute. Hold on here. More rejection, right? 1 minute, 5 minute. More rejection, more rejection. And you can see, looking back in time, you see down here, velocity, right, is growing to the downside. Now, you want to see where your big dips are in this market. If you're looking for big dips to buy in this market, we're not there yet, are we? Right? You got another one right here. You got another one right here. We're not quite there yet down here, right? We haven't tested new lows right now, so I'm not quite looking to buy a dip. I see the double bottom. I see what you guys are talking about. Higher, lower bottom, higher, low, higher, low. Kind of broke through this one right here, so I'm really looking for a retest, probably of 209. Capitulate for me personally. If you wanted to see, this is a price target down below. Let me put a little price target down here. Or you're not going to want to see this. That's what I'm looking for. Like $2.09, something like that. Now you're like, hey, Cap, you don't know what you're talking about. Okay, so we'll look back right here, and you see this rip right here on February 3rd, right? See how price came above the 1 5-minute. I believe that was the daily trigger right in here. Retested it, started launching, right? You see where this red line is right here and this white line right here, and now you have this big blue line, this big light blue line you're under. See how we're not above that blue line? We're below it, right? You see we're below it? See how we're below this blue line? Price is not above that blue line, right? So what you're really looking for, if you're like, I want to get all bullish I want to get super bullish here, you are looking for this white line to get a higher. You're looking for this red line to get higher, right? Oh, nope, hold on. Looking for this red line to get higher. And then you're also looking for this green line, believe it or not, to get underneath, right? All these confluences coming down right here. And then you're actually looking for price to trade above all these. And boom, that's where you get your next trade. And this is where you take the trade. You don't sit in the trade down here. You don't fuck around down here until you get price lower. You wait for the setup to take the trade. So is that setup here yet? No, we know it's not here. We know the setup's not here. We know we're not above the blue line, the green line, the red line, the white line, right? We know we're not. Can you take a small squeeze trade above from here to here? Sure. But are we trading above the 1 5-minute trigger right now? Let's look. Are we? Fuck no. Right? You know what this looks like to me? Like a classic sell the rip. Blast down. Try to escape the 1 5-minute. Sellers come right in. No. Right? Come right as a classic bull trap. Come right down here. Sellers come right back in. No. Find weakness and we start blasting down. Now you're like, okay, should I take a trade here, Cap? No, you can't. As a bull, you can't. As a bull, you need to see confirmation, right? You want to see the red line going there. You need to see the white line coming up, and you need to see price begin to hold. So price need to come up. Hold on a second here. Price needs to come up, right? See how it hasn't rejected? Make a new high. Confirm the trade higher. And that's where you jump in right there. Right? And even then when you do that, that's what is that? 265, 270, 280 or something. You're then only good to like 310. You've got more sellers above here. So do I think, and you see momentum is on the downside, right? So you're not seeing, watch these bars down here, you're not seeing these bars currently, even if price is lower. So let's say price, let's pretend that price is down here, right? Let's say price is bleeding off down here, but you start to see momentum turning up, right? You see another white bar right here, right? See another white bar right here, right? And you start to see like these lows not kind of like slowing down, right? And these bars are here. I'd be like, hell yeah, it's a bottom to buy. We could totally buy this bottom right here. We're not seeing that yet. You can see the slope downward still. Still in a downward slope on BBY. So do I think you should buy BBY here? No. People will say to me, what about if I just buy BBY and hold it until it does squeeze? What if it only squeezes from $1.60 to $3? There's your 100% trade right there, and you're upside down. So what if Tesla starts to scream higher tomorrow, and you're locked into BBY? What's Tesla doing today? Let's say you bought the dip in BBY. Now you got 30 grand locked into BBY. Hasn't come back yet. What is Tesla doing? Tesla's going up. You're stuck in BBY while Tesla's just screaming higher, right? Screaming higher. So if you're going to get into one of these trades, you have to time it. Can't be like, well, I'm gonna tie a bunch of money in BBY when Tesla's just blasting to the moon. What are you going to do? Put in 10 grand, lose $5,000 because you're waiting, and then trade $5,000 to make money. It sounds insane to me. So, if you're gonna take a trade in like Tesla, most traded stock, if you're gonna take a trade in the SPY, most traded ETF, if you're gonna take a trade in BBBY or AMC or GME, there's no reason for you to ever get locked into something that's not moving right now. You should be like have a bank of 10 or 100 stocks and have setups ready to go for those stocks, ETFs, ETNs, whatever it is you're trading, and be ready to enter and exit those trades when momentum is on your side, either to the upside or the downside. Tesla selling off in the background right now. Does that make sense to you guys? Yeah, no, it's not a pure casino. I can assure you that I can assure you 100% that BBY, Tesla, SPY, none of it's a casino. I can tell you exactly what I do. I go right on FinTwit and tell you. Well, when I say, hey, you should long UNG today, you should have a stop underneath it. If I'm like, hey, I'm long BBBY, it's not like let it go up 100% and then you enter. It's that you take the trade, you put stops below. If the trade is invalid or invalidated, your stops trigger and you're out, right? But 9 out of 10 of those trades I post, they print right away. So I mean, it's not really casino. For a lot of people that buy or trade or hold those tickers, for them it's a casino, but it isn't a casino. There are times to enter those trades. Proven times to enter those trades. It is a casino. So if it's a casino, how did I get 2 for 2 on PBY? Explain that to me. After the bankruptcy news, couldn't be a casino. How could I be right twice in a row if it's a casino? Explain that to me. I'm gonna gander here, right? I'll put a gander out there that I could probably call the next 5 to 10 BBY squeezes. I'll make that bet that I could probably do that. Or the next 5 to 10 that I call will all be squeezes. I'll put money on that, actually. Yeah, I'll put money on that with anyone out there. Anybody. Anybody. I don't care who you are. I don't care how bad. I don't care if you're fucking, you name it, Mike Burry. You name a trader out there, and I guarantee I'll hit 5 in a row. I'm 2 for 2 right now, so I got 3 more to go. How about that? 2 for 2 on BBY. If I was like really focusing on it, but I'm not really focusing on it. I know who is though. My man James Rowland is. That guy is a gangster. What if it goes bankrupt for it? Well, that's the point. You're not in it, right? That's the key here, right? You're not tied into BBY. You're not owning anything in BBY. AMC, GME, it doesn't matter. I would never own, I'll be honest with you, if you're part of that gang, I would never own any of those stocks. That trade was, you can look back on my FinTwit, man. you can look up like suspected saboteur, any of those guys. We were trading GME before it was anything. But even so, like you could own the underlying then, you can't really own it now. It's like I agree with Winky says in terms of it's a casino, but it really isn't. I don't know how to describe it. It's a place for retail traders to get swallowed up whole, and it's a place for professional traders more than likely to trade with each other, and retail just happens to be in the way. It's just horrible to say that. Yeah, you guys. It's not that hard to figure out when it's gonna squeeze. It's not that hard. It's fairly simple. Which is kind of crazy, right? Like you go into one of these like subreddits and it's like 1.5 million people that don't know when it's gonna squeeze. That's insano. That is crazy. Like absolutely crazy. I don't know how to describe that to people. I have some conversations with some people in the background of that stuff, and I'm like, it's like a whole industry built around this. Like watching the suffering of retail traders, kind of crazy. Yeah, it's not a casino. I guarantee it. I know it's not. I think it's like this whole gross thing that's built. Like I try to relate this to like this is going to be a controversial thing to talk about. So this is going to be a controversial thing to talk about. I know it is. Nice selling and excellent selling right now in SPY. Good to see. Keep coming down, baby. Come on down, SPY, baby. I want more selling in the SPY, please. Here's an example. So when I was a child, right? I remember this short story. When I was a child, if you went to New York City, it was a shithole. It's still a shithole, but not like it was in the 70s and the 80s. You went to Boston, it was a shithole. They had a place called the Combat Zone. People with like machine guns and rocket launchers and shit. If you went to Santa Monica, California, it was a shithole. Still a shithole, but not quite. Venice was like don't be out at nighttime, right? San Francisco, still a shithole, but not like it was at one time. Like you don't see some things you see in San Francisco now that are kind of horrible. But my point being is this. Young people moved to these places and created communities, right? So where you could live cheap, you could move there with friends, you could become a part of the community, become part of the school system, start a business, and people say, well, we can't do that anymore. So like right now, I understand the point of a young person that's like, you guys had better better spending power with your money. You guys had this that we didn't have, that we didn't have, and I agree with all those statements. And that does suck for someone that's young. But on the same token, even though you're kind of fucked being a young person right now, which is true, you still cannot accept that. You can't be like, well, life sucks. I'm just gonna live at home with my parents or something. You really do. It's not, and this isn't pulling your bootstraps up. It's saying to you, you're gonna get left behind. No one cares about you. No one cares about if you're gonna get a leg up in life. Nobody cares about if your problems are solved. You can go to the polls when you vote and shit like that, but you actually have to ensure that your well-being is taken care of as a young person when you're older. So I'll ask people sometimes, I'll say, well, where do you want to live? Well, I want to live in Santa Monica, or I want to live in New York City, or I want to live in Beverly Hills. I want to live on the beach in San Diego. I want to live in the mountains in Aspen, or whatever high-priced place. I want to live in a nice suburb, and I can't even afford to live there. But then you bring up something like, well, have you tried Cleveland? Have you tried, Wisconsin? Have you tried Detroit? Have you tried... there's places in Alabama. I know these aren't places you want to live in right now as a young person, but I'm telling you what, if I was young right now, if I was 20, 25 years old, and I was trying to make, if I was, because when I was that age, I wasn't. I was like, let's do this, let's do that. School, army, skiing, hiking, bike, and all this other fun stuff that I wanted to do. But if you are that person, you're like, hey, I just want to have like something for the future for me, and you know that the conditions aren't right for you to have that right now. I don't know what to say to you. I would say to you, try to find some friends and move somewhere that's affordable, that has great jobs, have training programs and cheap education, and create something new, just like previous generations have done. What's crazy is when I was young and I was growing up, my father had moved us to Boston when it was a shithole. And what's crazy is when I was young, I remember that people were like, Boston's never coming back. Boston's never going to be a great city. The prices will never come up in housing. The schools will never get better. All these like outside forces, just like the financial news services do to you. You have outside forces telling you it'll never get better. But the reality is you have to be your own person. And you have to, it's not bootstrap pulling. It's that ultimately you're responsible for your success in life. And if you've got a degree and you're not finding it, finding that success, you have to find a place where you can get paid, where you can live reasonably well.
The G7 moles sanctioning Chinese firms for aid to the Russian military.
Oh, yeah. Look at this spy coming down, baby. And make something for yourself, because no one cares. But these fat old billionaires don't care about you. I'll be honest with you. These guys don't care. Politicians don't care about you. It's gross, right? And you'll wind up being left behind, is my point. You'll wake up when you're 40 or 50 years old, and you won't have made a difference anywhere, or made something, or been a part of something that's being made. And you might get stuck where you now have those crushing medical bills, or you're 3 times into a triple, your house is like double and triple mortgaged, right? Or you had, I don't know, all kinds of bad things that can happen to you as you begin to get older. So I understand the bitching, I understand the vote, and I understand all of it. But at the same time, in the back end, you have to be like, hey, how do I get ahead? How, you know what I mean? How do I get ahead? How do I make that happen? So that a lot of that relates back, or comes back to what I was talking about just a few moments ago. Chi-town, baby. I should have said Chi-town, huh? You think we're breaking lower now? This is. Can you imagine being in puts right here? No way those things are printing. I guess a put spread would print, or some shorts. Put like 0-date puts in here. It's gonna be nasty. No way it's good. There's no way. Wikiface saying, so you're saying that BBY's Cleveland, except the CFO of Cleveland didn't jump off the roof of a building? Well, yeah, if you go back to like Boston, if you look at Boston, right, it was a shithole. And so just think about this. So now I moved to Detroit, right? About 3-4 years ago I moved to Detroit. Well, it's longer than that now. It's been like 4 or 5 years. So it's just pre-COVID. Those are like the lost years, I guess. We'll call those the lost years. But before I got here, it was like in the early 2000s to 2010s, it was a real shit show. And then the time that I've been here, it's just become like every other city. I know that they portray themselves as a shithole, but if you come here, the bad parts of town look like the bad parts of town in LA, look at the bad parts of town in New York, look at the bad parts of town in Boston. They have really, really nice parts of town here in Detroit. They have all the services. They've got a great food scene. They've got kick-ass music. It's Motown, baby. They have one of the largest EDM festivals in the United States here every year in your backyard. Now, they don't have skiing and hiking. They do have some great outdoor stuff, but they don't have the big mountains and the big surf. They have great lakes, though, that you can sail on. You can scuba dive, all kinds of other shit. Is it perfect? No. Are you sitting on the beach in Venice? No. But there's no reason. Dude, engineering jobs, doctor jobs, out the eyes here. You can come here and get an engineering job, boom, make 90 grand a year, and have a cost of living that is 3 times, 4 times the cost of living in San Francisco. You can fly anywhere you want to go skiing at that point. You can afford to go scuba diving down south. You can afford to go to San Francisco and eat in the best restaurants whenever you like. And I know San Francisco is claustrophobic. You know, so you can go anywhere you want, afford anything that you want, and live in a great place. So, I don't know. Not that that's for you or you should do that, but I understand that struggling, crippling debt. I understand that. I could get it. Yeah, so those community gardens that are being organized, they are now like full blown. I think they're CFAs. They're called. We have full blown like farmers markets. We've got Eastern Market is a hub for the Midwest, for all of the Midwest, for goods, and it's just like something you'd see out of a movie. It's just packed. So I don't know. I'd yeah, Electric Forest is a blast, right? Electric Forest is another EDM festival. That's two, right? Two EDM festivals. Yeah, they got two big. I should have mentioned them, and they got Lakes of Fire too. So that's number 3. They got Lakes of Fire. They've got Electric Forest, and then they've got one more. Because Detroit's the home or one of the homes of techno. Yeah, it's not a bad place. We take vacations every year. We go wherever we like. We do whatever we want. The houses I bought here, I used to buy houses here for like $3,000, man. $3,000, $15,000. Those houses are now selling for untouched $30,000, $25,000, $15,000. If you renovate them, $200,000, $300,000, $400,000. Some are like, some of the really cheap ones, like 15 years ago, are now going for $500,000, $1 million in the right parts of town. So oh, you guys want? We don't have blood yet, though. This is just grinding lower. This is a problem, believe it or not, for bears. Bears need acceleration to the downside, and then they're not getting it. Bears must get some acceleration. It's required here. This could turn into a dip buy here. Bears need acceleration. I'm watching it here in the background right now. See if bulls are going to get some acceleration here. Bears really need acceleration. The longer we spend sideways here, the worse it is for bears. You don't want to see this here, man. This is like rip central. Like in these 5, like if you look at a 5-day chart here, I want to show you this. You don't like seeing this stuff. This sideways stuff here, this is building momentum, believe it or not, for bulls. I'm going to show you it here, too. I'm going to explain it to you in just a minute. When you see this kind of stuff here, price is not following. This looks more like consolidation to me. And I'm going to show it to you what I mean here in just a second. So we're going to look at the SPY, and I'm going to show you what's screaming up in the background here. It's right here, okay? So I'm going to get rid of this, and I'm going to show you what's happening. The longer we spend here, right? The longer time that we spend here, I want you to see what's coming underneath. Watch, we'll give an ode to Mr. Yen. So the more time we spend dicking around over here, right? The more time it gives for momentum to build underneath the S&P 500, right? Just smashing and bashing up higher, just like this. It's giving now space for the bulls, and you're seeing this. We're not seeing rollover in momentum, right? We're seeing it chase higher, right? It's chasing, chasing, chasing. Now the bears here, I want you to see this green line right here, right? We'll turn this green. And you want to see this, that's not right. Oh, there's got to be some screwiness going on right now. This Windows 11 shit's not doing it for me. So what you need to see is this green line just come over here, right? And start to get some acceleration to the downside so we can get some lower numbers, right? 402. You need to see that. What you don't want to see over time here is we start trading sideways like this kind of nonsense. Start trading sideways like this, and this momentum is coming up, right? All you need is this trigger to come right underneath, and we're going to get a face ripper higher. So the more time we spend sideways, the more chances are of us exploding higher at some point. Hold on here. Bears need price acceleration on the down. They need to get that here. You need to get that new low. You need to get some acceleration to the downside. So I don't like seeing this. If you want to get bullish again, what are you looking for? If you're a bull, what are you looking for? You're looking for no acceleration to the downside, right? We'll just snap this right here. You don't want to see acceleration to the downside. You want to see price be stable. And you want to see a break above what? Break above 411.99 right here. You'll likely see this white and red line come higher. You'll see the green line here break above the green line. So that's basically 412, right? So if you want to get bullish, when do you buy the dip? It's not that high, is it? It's not really that high, is it? So bears don't want to see this. Bears need to get underneath here and get some price acceleration. If they keep dicking around in here, right, we start doing this nonsense, and you get the 1 hour coming up and you start going like this, it's literally going to be straight north. Does that make sense? So none of this. This is bad news for bears. Bears need acceleration to the downside. Hopefully they can get it into this close, right? Bears need to get underneath, close underneath.
So looking now to the
Start
early market
sending
on
it
close
down.
imbalance, currently sitting at 922 million to the sell side.
The longer that we spend in here, the longer that we're down here, this demand comes in, we're going to get a face ripper right in here. So this is what you want to be looking at if you're a bull or a bear. All this shit in here means nothing. Does that make sense? So none of this doesn't mean anything. It's all about two things here. Ready? You can snap this at home. All right? You can take a snip of this at home, and this is what I'm going to show you. If you're a bear or a bull, if you're a bull or a bear, none of this means anything. If you're a bear, what do you want to see? You want to see the break below, rejection, so we can get lower prices, you can get your 402. If you're a bull and you start to see us trade above here and it holds and starts making its way higher, you're going to get a directional move. Make sense? Directional move, directional move. So what I'll do is I will put this right here. You've got your price target down below. It's 402. And some change. You see what I'm saying here? You want to see this move down and then start bloodbathing it down here to 402. If you can't get this move here, we start goofing around in here for like a day or 2, 3 days or something like that. We start climbing up here at some point. That shit is on to the high. We're going to be retesting some highs again. And it won't be pretty. It won't be pretty. On the upside, upside targets on that move higher, easily retest at 418.31. Easily. You can forget about this stuff up here. We're looking to attack this 418. Right? So we break above here. This shows that bears don't have the momentum, and we're going to go up there and attack this one, and more than likely start heading higher from that point. It's all on the bears right now. So where's the long, right? Above this 412, super long, like load the boat. And price, or you do a stop loss right below it, right? Take your you like long, right? Buy, 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 right? And stop losses under here. Stops down below. Right there. And do the inverse of this for down below here, right? Buy your puts under here. Buy puts.
The Reserve Bank of New Zealand says liquidity policy review seeks feedback on significant policy issues, intends to issue at least 2 more consultation papers. So again, it's from the RBNZ.
Stops right there. Just like that. Does that work for you? All this stuff in here is nonsense. Nonsense, 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 nonsense. There's your next move down. There's your next move above. You can see it, right? Look at it. Came down. Bears couldn't do it. Ripped higher, right? Come down here. We don't want a repeat of this, do we? You want a repeat of this, right? You know what happens, right? Can't do it over 3 days. Boom, rip it higher. All right, back over here. This is the next buy zone down here. This is what bears want. Close all this bullshit down here. Bears want to get underneath here. Close that up. 402. Bulls looking for a buy down here. You want to snap that? You can. See if I can. There you go, right there. You can snap it. If you want what I think's going to happen, you want my opinion of what's going to happen, I can't give you one. I would really like to buy this down here, though, to be honest with you. I hate buying this shit because it's only good for a day or two. I hate buying it like this. I hate buying that shit. I want to buy like some safety. I want to buy down here. Be like, yeah, let's ride that. Woohoo! Only took a day. I mean, give me this. If I'm a bull, I'm like, send it, dude. Send it down here to me. Send it down here so I can take a ripper. Otherwise, I have to wait until we trade higher to confirm the move higher. Yes, sir, smart man. Troy Corp. What is that? What does the goat call this? Diddling in the middle, right? Is that what we're doing here? Just diddling in the middle? Let me know what you guys think. I'll be honest with you. You could probably take a sweet ass straddle or strangle here. Into Friday, you could probably take like a 402. Let's look at it right now. Probably take a sweet ass strangle here. If you can get some like really cheap 418s and 402s. Let's look at Friday's expiry. Or even Monday. Let's look at Friday real quick. So Friday expiry, we've got 36-cent 418 C's. And we've got 402s that are 26 cents. Dude, how could you not be a call and put buyer right now? What is that? A 60-cent trade. 60-cent strangle on the market into Friday. That's a pretty badass trade. What's that? What do they cost on Monday? You could probably buy the call side right now, too. You know the crazy part about that trade is? You could probably buy the call side right now, and if we traded higher, buy the put side. Like, you buy the call side now, bam, bam, buy the calls for Friday. If we start squeezing higher into the close, bam, buy the put side. Buy the dirt cheap calls down here and the dirt cheap puts up here, and then you don't care which way we go. Now, I don't know if that happens between now and Friday. We only got 3 days left, but you might see some kind of a move in 3 days. Maybe Monday is a better trade on that. Maybe farther out in time. 418s are 65 cents on Friday. And then the 402s are 50 cents. That's actually a cheap trade for Monday. It's like a less than $1 trade. How many? I mean, dude, I buy dollar zero dates all the time, like 90 cents, 70 cents. You've got a strangle for Monday. A strangle for Monday in the market would be baller. It's a great trade from here. Cap bullish on Geek Squad. Now 3:38 in the afternoon. We've got 20 minutes left. You guys got my take on. You guys have my take on Tesla. You guys have my take on. I'll go to Tesla real quick one more time for you guys. We'll look at Tesla real quick into the close. And you guys want to look at UNG? We can look at UNG real quick. Let's look at Tesla. And we're just going to do the 1 minute chart, okay? Now, when I post stuff to you guys on, so Tesla's extremely bullish into this close. When I post your stuff for you guys on FinTwit, man, we're really bullish right here into this close. Be careful if you're on puts right now. We could squeeze up into the close right now. I'm almost going to confirm it here. But here's the deal on Tesla, okay? We're trading right now at 201, okay? You need to put stops underneath right here. So your stops currently on Tesla should be at 286. You can try to buy the dip down below here at 197.04, 196. If we trade below at any point.
Early market on close imbalance still sitting at 922 million to the sell side.
If we trade into this 196 and start to give it up in here, right? We're going to go down. So what do, right? If you're like, okay, my stops are triggered here, right? Hey, Cap, my stops are triggered here. What is it? Hold on 1 second here. So right there, right? You got something like this blue line right here. Oh, that's not right. Dude, what is with this stuff here? I got some real wonkiness going on. Blue. I want the blue. Windows 11, man, is buggy as fuck. So if you see me out there and I'm like, hey, this is a good time to take a long in Tesla, wink, wink, right? Into the bell, great time to take a long in Tesla. You know, as long as Tesla's trading above here, you're good to go. But you got to put stops in below. Does that make sense? If your trade isn't validated for us to continue higher, you have to put stops in. Next thing, though, is let's say you triggered your stops, right? And let's say Tesla does not regain its 1 minute. You're not going to buy, right? You're going to wait for it to come back above its 1 minute again to take that trade one more time. If it doesn't regain it, it comes back down here. You can buy again down here, but you got to have what's called stops below again. Stops. The other thing to think about here is where does Tesla go if it continues higher? So let's say we're going up here. I'm gonna assure you of something, okay? I don't care when you bought in, but I can tell you this. I had buy orders in at $95. I expected the morning that we came down to $100 that we'd hit 95. I missed that trade. I wound up buying 135, right? So I'm not a buyer here. You might be a buyer here, but I can assure you that there were buyers that are just looking right here at 216-ish. And they're going to say, fuck that. I bought it $100. Fuck that. I bought it at 135 or 120. And as soon as I get up here, I'm going to take my money and run, right? Now I'm cash rich on Tesla. And I'm still a Tesla bull, but what am I going to do? I'm going to wait as a Tesla bull. I made tons of money. Making bank, dude. I got great dollar cost averaging. What am I going to do? Not every Tesla bull is going to do this, but I assure you, some are. And what are you going to do? They're going to wait and see if price doesn't reject, get cast to the depths of hell, right? That it doesn't do all this nonsense and bloodbath down. What they're going to do is they're going to wait to re-enter the trade once it breaks through. If it takes 2 weeks, 3 weeks, whatever, they don't care. They're just waiting for this to happen. Once that happens, they'll be like, oh, yeah, I'll re-enter at 220. I got out at 116. I re-entered back in again at 222. I'm happy man. Happy woman, whatever. So just know as we trade up here, no matter how bullish you are, there are sellers that are bulls, not bears, bulls. And I assure you, too, that bears know that there's natural selling that's going to take place up here. So there's probably a big bear up here going, oh, yeah, some of these bulls, man, they're going to be taking profit above. I already know that's going to happen, so I'm going to start my short right there at 216. I'm going to get help from natural selling up in here. Then you get a hedge fund that's like, yeah, we're getting natural selling up in here. I'm already long since 100. I'm the actual hedge fund that bought right here. And I'm going to look for a dip buy down below. We're still taking it long, right? So you get that natural selling as we come up in here. And they're going to be looking for these things coming up. Natural selling. And maybe buy that next dip to break through this 222 above. I wouldn't buy that one. I'm a retail trader. I don't know what the banks are doing, but I'd buy it over here for sure. Okay, so that's Tesla for you. We're going to look at UNG real quick. And this also applies to UNG. And we're going to look at UNG. And you can see what happened here, right? Nice big fat squeeze, right? Watch what happens here. This is UNG. I want to show you something here. Very, very important to watch. How do you know if a UNG is going to squeeze?
Early market on close
or
imbalance,
not.
962 million to the sell side.
Right. Started trading up here, declining volume right here. Put a long in with a stop below it, right? Sold off, didn't work. Same thing right here, right? But volume here or weak, there's more weakness here, right? We sell off. So right down in here, right, we see declining momentum, right? Right here. So you can start saying, yeah, I'm going to take a long right here and see what happens. Stops below. And all of a sudden you see a ramp above here and boom, you're off and running. You can see right here, if you'd taken this long right here and you had your stops right here where this retest was, boom, you would have made how much down here? You would have made, well, I don't know, $8 or something. Hold on a second here. Not $8. You're gonna buy 0 dates. What you're gonna do? 0 date 20-cent calls for that face ripper higher. You can see the momentum peaking. Even here, you can see the momentum peaking, and the rollover commences. So the question becomes: is UNG ready to buy again? Kind of looks like it, doesn't it? Oh, it's starting to peak up right here again. See that peaking up? See that dip buy down below there? So when do you buy UNG again is the question. You could probably take a trade on UNG with a stop below. You could do a stop below. Stop below at 815 or 805. And long UNG from 825 to 849. Take your money and run as we get to 845, and then look to re-enter the trade once momentum catches back up. So it'd be like this. It's probably a quick trade in there. Take this trade right there, take the money and run. If once momentum catches back up again, once the momentum catches back up, and if price can get above and retest here, that's a huge trade right there. That's a monster trade. Big money in that trade right there. You'd want to be seeing this momentum come up and come up and come up and come up. Looks like dip buyers are in right now on UNG. Disney earnings. You guys want to talk Disney? You guys want to do Disney earnings? Yeah, puts on AS Rock. You guys want to do Disney earnings real quick? Let me know if you do. We've kind of nailed these calls, haven't we? Calls and put. Well, not calls and puts, but direction. Hold on here. We're going to tell you guys what I think is, hold on here. Let's see if we can do, give me a second here. $10 left. It's always funny. You see people are like, takes them like 5 hours to give you the, okay. We got CVS. Where's Diz? They're not today, are they? Are they tomorrow? Oh, it released it this morning. This morning they released Disney. I wasn't even paying attention to Disney. Let's see what we have after the bell today. You guys want to do PayPal? PYPL? Is that today?
Market on closing
Yep,
balance
that's
currently
tomorrow.
sitting at one spot, 2 billion to the sell
CVS.
side. We'll just wait for the final orders to come through before we call it.
Let's do CVS. Let's do the old CVS as they come into the bell.
Market on close imbalance, 1 billion to the sell side. Market on close imbalance for today's session, 1 billion to the sell side.
Oh, CVS, baby. Did CVS get their squeeze? Oh, oh. Did CVS get their squeeze? Did they get their squeeze? Oh, yeah. Did CVS get their squeeze? Oh, man. Man, just look at that. Boom. Burr, 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 burr. Just burn away. Unreal. Okay, so let's talk about CVS into the close. We got 9 minutes left. Look at that, dude. This is money right here. Could be a giant squeeze again. Oh, look at that. Well, it's like a big old trap. Huge buying. Huge or momentum swing right here. Ripper. We've got an implied move. 1.2%. Crazy part though, right? Into March 3rd. They have a 3.3%. So March 3rd, 3.3%. This is a nice one to get some spreads on. So expected move is 88.38 and 90.53. 88.98. Ooh, they're claiming that this is it right here. And then they're claiming 90.53. Maybe they're waiting for some this is another great strangle trade actually right here. This is a great strangle trade. This is an outstanding. Oh, I like this trade, CVS. But on March 3rd, they have 3.3, 92, 49, and 86 down here. $86. $93 up here. Ooh, I like the straddle on this one. I like a straddle. Maybe even a strangle here. I'm going to go with a quick rip down. Ready? Here's my call on CVS ER. Quick rip down to 87.57, and then they're going to try to tag. They're going to try to trade $94. 87.57. Try to do this before you come to the bell. Look for a dip buy down below 87.57, and then we're going to try to trade to $94. You guys probably think they're going to close the gap below, huh? I bet you guys are like, we're going to get filthy cap. We're going to blood it down here. And we're going to blood it down here into the bell. These cheap-ass banks probably will. If the report's too good, we could...
So 10 minutes away now till we get Disney's first quarter 2023 earnings. So estimated EPS 75 cents. An estimated revenue of $23.4 billion.
Disney, you want to know where I think that goes? I think Disney trades down to 104.07. And I think we'll do two like this, two like this. There's CVS. Disney. And I'm going to go with 104.20. You're going to buy 104.20. Disney, man, always does the, hey, what's going on with this? Why is this shit not doing this? I don't know why this isn't working here. $104.20 right down in here. 123.71. Woo! Disney. I think Disney's going to rip. I'll be honest. 111.47. This, you might not tag this today. 111.08. Get that right. I think that Disney's gonna sell here, and then we're gonna trade to 122. Disney does not want to give up. Does not want to give this up right here. Disney's walking the plank, I'll be honest with you. Disney's like Captain Jack Sparrow. All right. Oh, they already reported? No movement. Did they not get a? Did they not get a? What time do they report? I'm asking because I have a family member that works there too. What time do they report at? Yeah, because I'm showing you this here. Let me show you CVS. See right here. Sitting right on their 88.92. So no report on CVS. Disney. I thought that they reported pre-market. And then I was reading this over here that said no, that they didn't. So no rip on CVS. Well, fuck you, CVS. Hey, what's up? Sorry for swearing. Did you hear me swear?
We can hear you.
I apologize.
Anyway, what's that?
Sorry about that. I got my kids in the background. I love you the most. Oh, Disney baby. Oh, you can hear me? Shoot, sorry. I thought I muted it. Sorry about that. I apologize for that real quickly. Where's 123? Right here. Right
So
there.
5 minutes away now till we get Disney's first quarter 2023 earnings. So estimated EPS of 75 cents and estimated revenue of $23.4 billion.
There we go. You guys think they can trade up to this 123 or not? So they did do the big revenue beat this morning. This shows you they haven't slept in like fucking 5 days. CVS reports big revenue beat, 10.6 billion deal with Oak Street Health. Hell yes. That's surprising. The Oak Street Health deal was made public like a month ago, wasn't it? Yeah, I apologize for the. My daughter asked me if I would take her to buy a cake. Yeah, so we already got the squeeze in CVS. Is Dad doing live tomorrow? Yeah, I'll be doing live tomorrow. Stop selling razors and they won't have to. Disney going down after conference call. I don't know. No, I still. So hold on a second. Let me ask you guys or tell you guys some stuff. Show you guys some stuff in the background. I still think CVS goes up to. I still think CVS goes up to $94. That price target's still valid. Do you think it'll tag 94 or no? That fucking price target's still valid on not Disney, CVS. Now trading 112.25. Yeah, I think Bob Iger is going to come out swinging too. I think Bob Iger is going to be like, "Get out of my face! We're making money here. Never fuck with the mouse." Any hope for UNG? We went through UNG earlier. You want to see? Let me see here. Yeah, you want to see price stay above. I think we gave a target, right? You want to see price stay above 825 on UNG. Mike Barry wants to trade me. I think that CVS price target is still the same price. You'd need to see some. I'm looking at it right now in the background.
Shortly expecting Disney's first quarter 2023 earnings.
Oh, you don't want to break this right here. This is the ugly. This is where like that shit'll bleed. You don't want to see this one right here. This'll blast straight down to 104. I don't care if it takes a day or 3 days. It's going down there if it does. Bob Iger's got to show up to the party. Hold on 1 second here. Yep. Now trading 112.30 on Disney. Oh, 113.89. Uh-oh. Uh-oh.
Adjusted
Oh.
EPS, a beat on estimates at 99 cents versus 74 cents. First quarter revenue, a beat at $23.51 billion on estimates of $23.39 billion. Their first quarter media and entertainment
Bob
distribution
Iger's
operating
like,
loss.
out of my way. Bob
So Disney's
Iger's like, get out of my
subscribers,
way.
161.8 million. That's a miss on estimates of 164 million.
Oh, they had a little
Hulu
miss.
and live TV subscriptions, 4.5 million, a miss on estimates of 4.6 million.
Oh,
Their parks and experience and products operating income, $3.05 billion.
tempered.
ESPN Plus subscribers, 24.9 million. That's a miss on estimates of 25.7 million.
Bob Iger's gonna come out and he's gonna say something, doesn't he? Did you see someone was saying that he's gonna move Disney out of Florida? That was wild. What's the implied move on on Disney today? Let's see what the implied move is. 117.33. So that was a tag of that, right? Almost. 117.33 is the implied move on the upside. And then on the downside, implied move is 105.
So just to repeat Disney's earnings, their revenue at a beat at $23.51 billion. And their EPS a beat as well at 99 cents on estimates of 74 cents.
Beat. But they didn't beat everything, right?
However, their Disney Plus subscribers a miss at 161.8 million on estimates of 164 million.
That's almost a tag there. 117.37. That's their implied move. And then 105.84. There we go. Let me see what you guys are saying. AEIS reported earnings of 170, consensus 160. Especially if you saw a snippet of the recent cartoon, Iger de-woking them. Agree with Chase for Disney. Go woke, go woke. Probe may apply. Go woke, may broke. I don't know. Do you guys know anything about the abrupt change in CEO? I'm reading some of what you guys are trying to say here in the chat. I don't know about charting VIX, but it hit a big trend line. CVS looking razors behind counters deserves that. That's hilarious. Stop stealing razors. Aftermarket rallied on shitty earnings. Now CBS is running market down on earnings worries. Reasons why I'm short Disney. Abrupt change in CEO. Yeah, like Bob Iger's like the guy, isn't he? And don't they run? I thought there was this whole thing where they basically run their parks, and the counties would have to assume the cost of those, or taking care of those parks. I could be wrong on that. And then I heard rumors of them actually threatening to move it out of the state. Any hope for UNG? I think we talked about that. Yes, it should be go below 100 again, but I'm always wrong. What's that on Disney? Mike Barry wants to train me. Disney streaming service going to go south, and the pundits want to see growth. Yeah, you get. So who just mentioned that? Travis, do you think that there'll be consolidation of streaming services? Lord Pente has some $90 calls that I got on a lark. For Disney, go woke, go broke may apply. I don't know, man. I don't like messing with the mouse. Someone was saying the other day, they were like, have you ever been to Florida? And a lot of people in the U.S. would say, yeah, only to go to Disney. Like if I go to like not the Rose Bowl, but if you go to like a football bowl game, it's also to go to Disney, or Disney's kind of like part of the package for vacationers. Or am I wrong on that? Maybe. I didn't see the recent cartoon. AAS reporter read that one. Form reporter earnings. Vol event suggesting crash. MPRWR. Bob Iger slamming his big wang on the table. Yeah, like the other. So Chase just brought up that it was in December. Jem is now tweeting about Vol event and suggesting a crash. I think that so Chase is making a good point. That we could have a crash. I think that whenever you are trading higher, hedging is appropriate. That makes sense. That doesn't sound bearish to me. So if anyone's saying we could have a crash event, you just hedge it. There's a complete different stance in hedging for a crash and buying expensive puts on a downward move. So it's easy to hedge a crash. It's not that hard. APPS craps. Mouse is included. Disney going to litigate until current government out of the office. I didn't know that. Barry wants to train me. Be sure you train you too. Disney up 4.5% after the golden age is coming. Yeah, there's like this. So I'm watching CVS. CVS is selling off in the background right now. Let me look at CVS real quick. I'm interested in jumping in the CVS trade right here. So we'll watch this tomorrow and see if this green line comes up for another test. Right there. The Disney right now. Let's have a look at Disney. Just be careful of above here at 124.33. It's probably 122, somewhere in there, and maybe even 120. Oh, it's cranking now, isn't it? $115.99. It still has another dollar to go higher. What else are you saying? Disney Florida is a package deal. Go woke, go broke. I think there's a truth. I think there's a. I mean, I don't like talking politics. I think that there is some kind of a. There's. How do I explain it? It's like. It's like when you watch the movie Aliens or Alien, right? When you watch the movie Alien, you still have the hero's journey, and from someone that might not know what to do yet, or hasn't or isn't already a hero. I think the Hollywood writing is terrible right now. I think that's a major part of it. Yeah, I'll be on tomorrow. Yeah, Travis, who if it becomes a board of governors, who appoints those? Is that the governor? Yeah, who appoints the board of governors? Is it an elected position or no? That's elected. Yeah, I'll catch all you guys tomorrow. But you guys are tuning out right now. Disney now trading higher, trying to get to 117.38. Now, this is the implied move here. Disney should be able to trade to 123. You'd want to see some kind of call expansion on Disney. Tag 117. Look for these to come up and take this higher. On CVS, same kind of a deal. Implied range, but there is range expansion above on CVS as well.
So just taking a look at the market wrap for today's session. A sell-off in tech stocks weighed heavily on trading today, with the most recent string of Federal Reserve speakers reinforcing the idea that interest rates will need to keep climbing to quash inflation. Their tone was clearly intended to catch the market's attention in what looked like a concerted